but there's a billion with a B dollars of multifamily property already in foreclosure. He just bought a house that was listed at $850 for $630. That's the kind of stuff that's coming.
Once again, back to everything Cardone has been saying.
Sure.
It's renter nation, and it's only accelerating. It's unfortunate, but I honestly think that dream's over.
I actually think the next 6 months are going to be the worst of the cycle.
I think you got to get out of real estate.
But I've told people for years the wealth formula hasn't changed in 100 years. You've heard me say it, but I'll do it again for the others. Step one.
All right, Zoobs, we've got you back on for a real estate market update. We got some big news with the new Fed chair. You don't like it.
Well, again, I think it's about being prepared. I think there's going to be plenty of opportunity. This reminds me of August 28th of 2022. Do you guys remember what happened on August 28th of 2022?
Yeah, my life changed forever. It was not good. I lost millions because of that day.
No, that's important.
Yeah, I know.
Because I warned people on the 29th.
But I already had all the flips. There was nothing I could do.
No, so for the audience not catching on, Jerome Powell basically said pain was coming.
Ooh.
And if you had a big surface area, lots of flips, you were going to be hurt.
Yeah.
Big time.
Yeah, that was the hard part about, I call that doomsday, because I'm already sitting on 50 flips that I already bought. There's nothing you can do about it other than just...
No, this is
try to sell them.
Yeah. So I unfortunately think we're about to revisit something like that because I think what Kevin Warsh is doing right now is he's fundamentally repricing risk, right? People expected Kevin Warsh in the last meeting to raise rates. Trump wants him to lower rates, right? There's this constant battle. But because Kevin Warsh has taken away what's called forward guidance, he's fundamentally changing how Wall Street and consumers should react.
What is forward guidance?
So forward guidance in a business terms would be like, we are thinking about doing this.
Yeah.
We
are
like
telling them what
it's like telling. So in sports, you're a sports guy. It's playing the referee, not the game.
Yeah.
Okay.
Sometimes referees or umpires, they have a big strike zone, little strike zone to use baseball.
Yep.
Right. And based on how it plays, you react differently to a tight time zone versus or a strike zone versus a wide one.
Yeah.
For too long, Wall Street has been playing the referee.
Yeah.
And Main Street has been getting effed because we can't play.
Yeah.
Right. So Kevin Warsh, if you guys don't remember, was on the Federal Reserve during the GFC. And he did not want to do the second money printer.
Mm-hmm.
He left the board in revolt because he didn't like what they were doing. And that was the kindling that became 9.1% inflation. So now he's in charge. He's the man. And he is trying to walk that back. So what does that look like? Risk is being repriced. What can the average person look at? Look at the 10-year note, look at the 30-year bond.
Mm-hmm.
All of those have been screaming higher. Kevin Warsh does not have to raise the overnight rate to get what he wants. He just needs risk to be repriced. He needs probably mortgage bond to expand. Right now it's 180 basis points, probably going to 200, maybe 220. So the entire debt picture is evolving right in front of us, and it is going to cause pain.
What kind of pain?
It's going to cause banks to finally force foreclosures in commercial, like multifamily. There's been a lot of extend and pretend. I don't know if you guys know this, but there's $1 billion with a B dollars of multifamily property already in foreclosure in Texas.
Oh, wow.
And I talked to a lawyer or an attorney yesterday in that space,
and
he's like, that's a tip of the iceberg.
Oh, man.
So we're going to see a lot of pain because, to your point earlier, Ryan, those deals were already done. You already had all those flips. These multifamily already are out there, but that's going to cause a lot of pain.
Yeah.
So again, it's about having a smaller surface area, and then it's about opportunity. Because again, plenty of wealth will be created, but not until the froth is wiped out. We just saw a $45 billion hedge fund get wiped out in 2 days.
Who?
I want to call
Leopold,
yeah, that guy.
Yeah, what do you think of that?
Oh, I think it's just a sign that if you are in leverage and risk changes, you can be wiped out. And
how did he get wiped out?
He was running a book that was 4x leverage. He was long AI chip stocks and short software. Those reversed. He couldn't get out. He had to sell to Citadel.
Well, dude, so this story's crazy. This kid worked at like OpenAI, and he graduated college when he was like 19.
Valedictorian at 19.
Yeah, this dude is like a genius.
Nice.
And so he's at OpenAI and all this stuff, and he's like, I don't even like what's going on here. He like gets fired. Then he writes this 150-page document outlining why he thinks
AGI is coming.
Are about to rip.
Oh, dang.
And then he gets funded with like, I don't even know, like 20 million in his fund or something small.
by
And then
comparison.
he ran it up in like 3 years to 45 billion.
Damn.
And he's like
What's his name?
23. His name's
25. But
25. His
yeah.
name's Leopold something.
We need to
Yeah,
get him on
really
the
long
podcast.
name.
Bro, well, he just lost like $45 billion.
It's a great time to have
I
him on the show.
But like, this dude, he was like the best investor ever.
Yeah.
Wow.
Like being
ever.
celebrated, Warren Buffett level.
I need to invest in him.
Well, he
come
just
back.
lost it all. But
But he's gonna
No,
come
I
back.
know. And
Yeah.
that's what people are saying. They're like, yeah, he lost it. But bro,
Yeah,
this
he's
dude,
gonna-
he's going to learn his lesson.
Yeah.
And like, I would invest with him.
Yeah.
I would.
Isn't that funny? That's how our mind works. We're like, we need to invest in his next
His
thing.
stock is low. We
yeah,
can get in.
Yeah.
high low. Yeah. Yeah. But again, that's the kind of stuff that I think Kevin Warsh is trying to break.
What do you
I-
think that's going to mean for single family property?
God, you guys are always worried about single family.
That's where we live.
Single family properties. Again, if you're talking about the homeowners,
Yes.
the homeowner is not stressed today. Right? 40% of homes are owned free and clear, 60% of what remaining are below 4%. It's basically fixed other than insurance and taxes. There's no underlying kindling for a GFC collapse. It's just not there.
Okay.
Right? You need bad lending. You need weak borrowers. The weekly unemployment claims came in at 197. It was 187 the week before. There's just no pain in residential. Now, FHA, probably a little bit of opportunity for the next 6 to 9 months because
Yeah.
it was illegal to foreclose for 3 years.
Uh-huh.
So there's 3 years of built up stuff in the pipeline that has to be flushed. There is opportunity there, but that's a very small niche in single family.
But what about like mortgage interest rates going up?
Again,
That
that
causes
is
pain.
but that affects the buyer. The residential property, mom and dad are fine. They already got the
But
4%.
if they want to move,
Again, they're going to look at the situation and go, "Hey, we're living here at $1,200 a month.
yeah.
Yes, I'm pregnant and I need a new bedroom, but I'm not willing to pay $3,000 for just
Exactly.
an
But what does it mean?
So they stay put.
What does it mean for people who work in the real estate industry? Realtors, flippers.
It means another
wholesalers.
tough year.
Escrows.
Another
Escrow.
tough year.
Yeah.
I actually think the next 6 months are going to be the worst of the cycle.
Damn.
Which cycle? Like since
Transaction cycle. So 3
Okay.
years, we've been in a depression. We went from 6 million existing to 4. I think the next 6 months are going to be like 3.8.
I actually think you're wrong.
Awesome. You
So,
usually do.
I think 2027 is going to be worse than 2026. That's my official
Now, let's
prediction.
define worst on transactions.
Transactions are going to go down. Home prices are going to go down.
So let's put some numbers on this because go down is a very cute way of not giving me.
I'll say that home values will go down between 10 and 20%.
Dude, you fucking smoking crack.
Whoa.
No, bro, I was right last time.
No, you were
Yes,
never.
I was.
Nobody has
Was I
ever
right?
been right
Was
calling
I-
for a 20%
Was
housing
I right
crash.
last time?
I don't remember what he was right about, but he was right about something.
Yeah.
Yeah, no, I agree. There was always something.
There was something he
You
was
see,
right about.
I was right about.
You are calling for a 20% housing crash in 2027.
That's
I want this
That's
on
a
the
bold
record.
claim.
Yeah.
Now, okay, folks,
Not
That
but,
means
but
the
again, but just-
Davila, that means the $500,000 house in Vegas
Goes
is going to
to
be
400.
400. You
just
think
to
that?
be clear, because everyone's always like, "Oh, 20%." That's that. I'm not talking about the whole country.
Yeah.
I'm saying some markets are going to go down 20%.
What do you think the overall country will be?
I think it'll. Oh, but it sucks because some areas just do well, so it'll look like it broke even, but then you'll have some areas.
so again, no national housing crash.
how much did it go down this year? Or
It
it's
didn't.
gone up?
It's up. It's up 1.7%.
Okay, so I'll guess it's going to go on paper. It's going to go up 0.5%.
Okay, so we actually agree.
Less growth.
Yeah.
less growth.
So again, I've been saying
No.
for 5 years, the home prices are going to go up between -1 and 1% nationally.
Yeah.
And that's,
I mean, in the crash, how much did they go down?
so that's the point that people don't understand. The worst year was 9.1%. Collectively, it was 24%.
Yeah.
Nationally,
24% nationally.
over
Yeah.
4 years.
Yeah.
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 In today's real estate market, it is really difficult to find cash flow, and I don't see that changing anytime soon. For this reason, I'm a huge fan of wholesaling real estate right now specifically. It's the strategy that I'm using in my real estate investing business, and it's what all of our students at Wealthy Investor are doing as well. And we give you everything that you need to start your wholesaling business and have the same exact system that I have. You get the motivated seller leads, the same softwares, the same systems, processes, and one-on-one coaching and support. We'll show you step by step how you can get started today and get your first deal in 30 days or less. So go to wealthyinvestor.com today.
But nationally, if you're a real estate investor, you don't look at national numbers.
No, I know.
No, I agree.
that's
But
why,
we got to
yeah.
talk about something that.
Well, you're in doing
I'm
a
in
lot of
California
Do you
and
think
Las
California
Vegas.
goes down 20%? Is that what you think?
I think some areas, yeah.
This some areas nonsense.
Because I'm actually a real estate investor. So I'm not a news broadcaster. I actually invest in real estate today.
Then say a city.
I would say Los Angeles County could see like a 10 to 20% dip in some areas of Los Angeles.
So
County.
back to this some area thing again.
Yeah.
So like,
Because I'm a real estate
give me a
investor,
zip
Mike
code.
Zuber.
Give me a
He's not a
zip
YouTuber.
No, I want to get you.
YouTuber.
Yeah, the 125,000
I'm
subscribers.
not a guru.
Okay, this show, who shows you're a YouTuber for?
But because my full-time job is real estate.
So you think I want to know a zip code that's going to go down 20%.
What zip code is Palm Springs in?
Okay, so Palm Springs. That's a
Okay,
state. Palm Springs 20%.
going down
10 to
20%.
20%. 10 to 20% on certain properties, yes.
Not overall, just a couple.
Just on a couple.
The houses I buy are
some
down 20% because I got a deal.
Some like let's just say Vegas, for example. Let's say
So
Las
now we're in
Vegas.
Palm Springs. We're back to Vegas. Okay.
Okay. Vegas, for example, the houses that are below 500K
Today.
in Vegas today are
Okay.
not appreciating. They're staying the same or going down in value.
Yeah, in the last 4 years, they haven't done crap.
Exactly.
Yeah,
But
okay.
the $900,000 houses in the same amount of time have increased about 10 to 20%.
Yeah.
So that's what I'm saying. A real estate investor knows that I don't look at all across the country and every single type of real estate. I look at certain markets.
So you have a buy box, huh?
I have a buy box. I've had a buy box for 10 years before you brought it up on the last episode. But yes, I have a buy box.
I want to remember what you were right on because it was
Because
like,
I said it was going to be a bad year for real estate, and you guys were like, "Oh, it's
I think when we did a video in January,
yeah,
Yeah, we
your
thought
transaction
would be
volume
up.
He was right about it.
yeah,
Oh,
I
yeah.
was right about that. Yeah,
So
and the
transactions.
prices and all that stuff.
No,
No,
no, let's not stretch the truth. It was transactions.
Yeah, you were right. There was.
I
you
said
said
it'd be
less
4.2,
transactions.
You said 4, and I think you're going to be right.
Okay.
But it was
I'll take
transactions.
that.
Stop price.
Do you
No.
So
want to apologize?
No.
So Zoobs, what do you think next year? So next year, you think it's just flat nationally? That's your
Again, we
Yes.
got to be clear. So we're talking price or transactions? Because we're
give me
splitting this.
each. Give me each.
So again, I think we have 3 or 4 more years of price. And again, I am talking median home price nationally.
Yeah.
I'm not down at Palm Springs or Vegas.
Yeah.
'Cause You got to
in national, you think flat.
flat. It's and let's be clear. It's mathematical certainty. We have to get back to affordability.
I agree.
Yeah.
We had 2 years of artificial growth because we printed money and had artificially low rates, where we got a decade of appreciation in 2 years.
Yeah.
That is not normal.
Yeah.
So we'll be 8 years to pay it back.
Uh-huh.
We're 5 years into that, 4.5 years in. So we got 3 more to go.
Yeah.
And then we're back on trend on price. Transaction, I'm going to take the other side. I love betting against you.
Okay.
I think the next 6 months, which is just to the end of 26, will be the worst of the cycle.
Okay.
We will be going at about 3.8%. 3.8 million will be the rate, which is
3.8.
below, which is a historical low. Not even 1981 was that bad.
What has it been the first 6 months of this year?
4 million.
4
So
million.
it's going down 5%, even lower,
Okay.
which in real estate is going to feel like depression because people are already starving.
It's already bad.
I'm
It's
gonna
already
say-
bad.
I'm gonna go under you.
Oh,
Whatever
really?
Oh, wow. You
Yeah.
think it's even worse?
Yeah, for sure.
For
Bro, I
sure.
actually look at the market again, guys. I'm a real
So
estate
if I'm at
investor.
3.8, how much
I've done
lower are you?
40 transactions this year.
So that
Houses
actually,
are sitting on the market longer and longer.
yeah.
I see price reductions. If I show you my freaking
I see it. I
searches,
see it. Yeah.
price reductions every single day,
Motivated sellers. So again,
motivated
so you
sellers.
think 3.6? I mean, how much lower?
You're at 3.8?
I am.
I'll say 3.7.
He's like
Oh,
3.79.
so you're going to be within a whisper.
He's like
I'll say
prices right.
3.6 to 3.7.
Okay.
3.6 to 3.7.
Okay,
Yeah.
I like that. I like that.
Yeah, it's going to be way lower because it's always slower in the winter than the first half.
Well, you know, we had Clinton Cooper on a few months back, and he brought up something of he's like, you know, I really don't like real estate long-term investment anymore. He's like, I don't think appreciation is going to happen the way that historically it's happened, where it's like, yeah, it's a near certainty that, hey, if you hold a house for 10 years, 20 years, it's going to appreciate X.
Yeah.
And it's like, we're all saying, yeah, the next 4 years, there's none. And,
Yeah.
you know, the previous 4, there's none.
Yeah.
And it's like, all right, if cash flow is already really tight in almost every market,
Yeah.
and you can't get appreciation, that was
Yeah.
like the saving grace of like, you're either a cash flow investor or an appreciation investor.
Correct.
Yep.
Now, neither look great.
Now I'm a stock investor.
Now we're going into crypto and stocks.
You did see the stock market fall 1,000 or what is it, 1,200 points the other day?
They'll be back though.
It'll be.
And Trump's America, bro. You got to bet on Trump.
Hey, I hope you're enjoying this episode, but how would you like to be the one that I'm interviewing on this show? I'm looking for entrepreneurs who've got a great message to share, who have an inspiring story, and who can add value to the audience. So submit by going to wealthyway.com. And not this new Fed guy.
No.
When did he take office?
Like 6 weeks ago, 8 weeks ago.
Okay, so he's brand new.
This is his second meeting.
Well, they were saying that Leopold guy, that Citadel basically put out a false report basically saying, hey, we think, interest rates are going up. That's our
Tuesday.
Yeah.
Citadel said surprise rate hike tomorrow.
And then it didn't happen.
Mm-hmm.
And then it liquidated that guy Leopold. And they bought all his stuff.
And he bought him. He's sick.
Yeah, he basically tanked his holdings and bought them for pennies from him.
Yep.
Dang.
And he's like, young punk.
Yeah,
Just
thank you.
freaking-
Thank you for that.
Now you've learned how to play this game.
Exactly. Wolf of Wall Street right there.
Well, no, the wolf didn't do anything. He scammed everyone. But Ken Griffin has just made a lot of people tons of money, and he just took that kid's cookies.
But let's talk about what people should be doing. So if I'm right, and the entire risk profile is being repriced right now. Your job is to reduce the surface area where you can be hurt, right? Less bombs fall on you, right? Smaller surface area. You need to raise some cash, and then you also need to get ultra aggressive. Because there are going to be more and more Leopolds, just at different scale, where you can go get seller financing, you could go get amazing deals.
Yeah.
I think the next 6 months are going to probably produce the best deals of the year because there are some people that just have to sell.
Mm-hmm.
Like, for example, a guy, you for my event last year, you'll know Millennial Mike, the SWAT officer.
Yeah.
He just bought a house that was listed at $850 for $630.
Okay.
That's the kind of stuff that's coming.
I mean,
because some people have to sell.
That's been a thing, bro.
Well, again, it's what I'm trying to tell you. It's happening more and more and more. But you have to be disciplined. You have to write lots of offers. You have to follow up.
Yeah.
So again, people are going to create amazing deals when you find somebody that needs to sell.
Yeah.
Can we get you two as like the new Skip and Stephen A?
But I feel like this is like, he's pretty much saying what's been happening for the last 100 years in real estate. There's going to be people that sell for a discount, a significant discount. Yes, that's called real estate investing.
That did not happen in 21 and 22.
Yes, it did, bro.
No, dude. I mean,
yes, it did.
At some level, sure.
Exactly, yeah.
Back to you at some level.
No,
but again, you could put a sign in the ground and you were getting offered over asking price back in 21 and 22. Stuff was flying off the shelf.
Yeah.
That is not happening today. To call that market and this market the same thing is to be a complete liar.
I'm just saying that there's always been deals.
Yeah, you can get a deal in any market.
I know. So I'm just saying, no offense, but your advice is like super vague.
No,
there's going to be houses that sell
telling you,
below market value.
I'm telling you
now you need to make lowball offers. That advice has worked for the last 50 years.
What I'm trying to tell people is the more and more that you do that today, your odds of success are going to go up. Most people in this game don't do the work. They're willing to pay list price. They don't write, 25% off below list price. Most people aren't you. Most people aren't doing mailers and, ads and all of this. They look at the MLS and they go, oh, it's listed for 417.
I think we're just talking to two different people.
Yeah.
You're talking to the active operator who does this for a living, and you're making offers every day because it feeds your family. I feel like he's talking to the guy who doesn't do this every day for a living, who has something else going on, and now he can go make offers just not full time and get them accepted.
He's going to get one deal. My guys get one deal a year.
But like back in 21, 22,
my guys lost.
His guys couldn't do crap.
Correct.
You aren't going to get any deals in a hot market.
Yeah.
No, exactly.
They still can't do crap.
No, they can because properties are sitting.
Do you think your guy that buys one deal a year would be better off just investing in stocks the last 4 years than going out and buying one rental property?
Over the last 4 years, the math says buying stocks.
Okay.
It's not even a question.
Where's our boy Graham?
So here's my take. In the next 4 years, it's going to be the same.
Absolutely
They would be better off, unless they're like me doing transactions every single day, they're better off just investing in stocks. I will take that bet. Okay.
So here's the deal. I've been around the block for 25 years. And again, people like Graham and yourself, all you've known is a stock market that goes up.
Mm-hmm.
Let's talk about real history.
Okay.
Do you know the last time the stock market had 3 years in a row of 20% appreciation?
Right before the Great Depression.
Yeah, I'll say like
Great
Yeah,
recession.
Yeah, so like 20 years ago.
And guess what happened to stocks the decade after that? Zero. It's called the lost decade.
So you think Graham
You all
Stephan's
are
wrong?
smoking. Yeah, I said.
You think
he's wrong.
Graham Stephan's wrong?
And I've told him he's wrong to his face on his show.
Really?
On the Iced Coffee Hour. I said, Graham,
I actually agree with you now. You need to get a real investor on because, like, at least I could say, hey.
Wait. So the real estate or the stock market had zero appreciation for a decade? Really? I didn't know that.
Yeah, for a decade.
Yeah.
Technically 11 years.
So what, 2009 to 2020?
No, it was after the .com crash.
Oh.
So it was like 2001 to 2013. Zero. It went up technically 113 points.
Well, it definitely went up from 2001 to 2007. And then it lost all of its gains.
Yeah, if you do the whole decade, the period.
What do you think, Ryan? Next 4 years, is it better for someone to go buy one rental property each year or invest their money into stocks?
Frick, dude, they're both a toss-up right now.
Because
I do agree that the stock market could be in an AI bubble, and it could just. But here's my other thing: if the stock market crashes like that, I'm gonna guess real estate's about to follow suit.
What happened to real estate in the 10 years that the stocks were down?
Well, what 10-year period are we talking about?
So 2001 to 2000, whatever it was, 13.
But bro, it's a different real estate market.
Well, from 2001 to 20.
Well, you want to go backwards, but you're not letting me go backwards?
Okay,
I don't understand.
I mean, the prices were flat too, basically.
No, they were up like 8%.
They were up 8%. Yeah. They went up from 2021.
Well, no,
2001 to 13.
2001 to 2013.
They were up.
They were up, yeah.
Yeah, because 01, because you're basically looking at 6, 7, 8, and then 9, 10, 11.
Well, I'm just thinking, like, locally in 2013, the average price in Vegas would have been like 130, 140. I don't know what it was in 2001.
Yeah.
But I can't imagine it was much cheaper than that.
Yeah, I don't know either.
Yeah.
But, it's a local thing. Nationally, I don't know what the number was nationally.
Yeah.
But I think anything with timing, right? Because I think we picked that with Graham, where it was like, well, yeah, from 2020 to 2022, real estate looked like the clear winner.
Correct.
But then, from 22 to 26, stocks are just destroying it.
Correct.
Mm-hmm.
So it's like, what's your time frame that you're...
But people still made money in stocks in 2020 to 2022.
Yeah, they didn't lose money. For sure. They went up.
Yeah. So...
I mean, stocks have gone up.
I'm just saying, if you're going to do real estate part-time, you might as well invest in stocks. That's my point. If you're going to buy one rental property a year and that's your game plan, you're better off just investing in stocks and like starting a side business or a side hustle.
Well, I would say if you can find deals, real estate's better.
Yeah.
And that's
but
all
you're
I'm
not
asking
going to
people.
find deals part-time.
Do you think that okay, so let's say somebody's going to put no effort into finding deals and just buy a property.
Oh, that's retarded.
Okay. So we all agree on that. So
no, I'm not
just buy real estate.
No, I've never said that. I am saying do the work, get a buy box, be disciplined, learn it better than anybody else, and one fish will swim in your area a year.
You still think people should buy rentals?
I'm telling people to do the work.
Yeah.
And if you are able to buy
do the work and buy rentals.
Yes, if you are willing to find a house listed at $850 and buy it for $630 and walk into a couple $100,000 of real equity, yes.
Yeah, that's how it beats stocks because you get a deal
on a rental.
Yes.
That $600K would lose.
That's a house hack in this case.
Okay. So you're telling people to buy a house to live in for less than market value. Because that's different than buying a rental. Because the numbers you just said don't work on a rental.
Well, the markets are very different across the country. They don't work in Vegas for sure.
Yeah.
You guys know I love the game of golf, and that is why I started M19. It is a golf mastermind for entrepreneurs who are doing over 7 figures in their business and who want to go on bucket list golf trips together. We already have hundreds of members all across the country, and we've been to some of the best courses in the world, places like Pebble Beach, Pinehurst, Bandon Dunes, and many others. The course is the best place to do deals, make great relationships, and have fun. So go to mastermind19.com today. I don't know of any house that's $700K that would work.
Yeah, I
don't know.
That's what. What's a mortgage on a $600K house? Like 5.
I don't think there's any market in the world right now where a $700K.
Probably right.
Yeah,
no, it's
now if it's a fourplex or whatever.
Maybe. Yeah, even that.
Yeah.
800K fourplex in Vegas.
But again, remember who I'm talking to, right? The full-time employee has got a family, trying to stay healthy, keep his marriage happy.
But Brian's point is, why not just
invest in stocks? Yeah. Why?
Because again, I think real estate is inefficient and stocks are efficient.
I don't think real estate is a part-time game. I don't think anyone can build wealth doing real estate part-time anymore.
Well, let's talk about this. Back in the heyday, when you were W-2 and
what a
buying
retarded
rentals,
thing to say.
how many hours a week were you working at real estate?
Real estate, it was about 25 to 30 minutes a day, 7 days a week.
So you're putting in 4 hours a week?
Yeah, I call it 4 hours a week.
Just hunting deals.
Hunting, that's all, securing capital and finding deals. That's all I did.
And you were buying how many houses doing that?
Like 1 or 2 a year.
Okay.
4 hours a week.
4 hours a week. Okay. Yeah.
And
I believe back then you could build wealth like that. Buying 1 to 2 houses a year? Yes. In 2026? No, bro. These houses are too expensive now, unfortunately. I wish that was the case. I wish I could agree with you, but you buy 1 house a year and you negative cash flow or break even, bro, in 10 years, you're almost going to be at the same spot.
Well, I think that to make it work now today, you got to do a house hack or whatever he's talking about. Like, you just can't rent it.
No,
it's impossible.
Okay, so now we're talking about different things. Because I'm talking about buying rentals, and now you're talking about house hacking.
Well, let's say, Brian, what about what do you think about Airbnb?
I think Airbnb had its heyday. I think a lot of areas are pushing back against it. I think what might be a more interesting question is, am I a fan of rent by room?
Yeah, any kind of model that's
not rentals,
just like running a hotel.
It's just.
So you're getting out of the single family rental game.
Oh, again, I'm not in favor of those. I don't know if you caught that. I'm not in favor of.
He likes multifamily.
Multifamily.
Okay, so you're not in favor of single family.
Single families are hard, not impossible. You're making them sound impossible.
Okay,
but
you're not in favor of single family rentals
in much of the country.
Much of the country.
To do.
Okay.
And so you are in favor of.
That's the first time I've ever heard him say that.
Again, if you're looking for cash flow with 20% down, it's no secret that the math doesn't work in a lot of the country.
Okay.
But in real estate, there is a lot of ways to produce income.
Okay,
Yes.
so we're all in agreement. We hate single family.
Okay. All right. So you're on our team. So I was right about that.
Team.
I will never
You're
be
on your team. You will eventually.
I will always be on the team opposite of you.
You're like right there.
And Stephen A.
He's like right
No chance.
He's
But
like,
then when we get off camera, I saw him making out back there.
no, but so now that you're out of the single family rental space, what's the best place for people to build wealth in real estate?
So again, if you're an active person like you, it's going to be buying stuff at 50 or 60 cents on the dollar in multifamily. Those deals are already cooked. They're already been done. You can't save them. It's go network with bankers and get on their preferred dial list. Because those will not hit the market.
Okay.
Those will not show up on LoopNet. They will not show up. You got to go network in.
So you're a
banks.
multifamily guy now.
I go where the opportunity is.
Okay. That's fair. I agree with that. So you think the opportunity is in multifamily?
Yeah, and to be clear, larger multifamily.
Okay, that's where I'm trying to get to.
Large?
I'm trying to get to.
Call it 20 and above. So not 4.
What would you say your buy box is at this point? Is it 20 to 50 unit?
Yeah, 20 to 50. Because if I get above 50, my
you're not looking for 100 to 200 unit.
And how
big for me?
How expensive are these 20 unit properties? Because in Vegas, that's like $20 million or something crazy like that. Like,
well, again, if they're going to be busted, you're going to buy them likely at 60% of last purchase.
okay,
They're going to, let's be clear, they're going to be ugly,
and I bet you
and they're going to be
still
a
have
heavy
cash flow.
lift for 2 years.
I want to tell you guys a quick story. So one of my buddies, he builds big, massive apartments out here, like 9-figure deals. And he was telling me the other day, they built one. This was back in like 2021, 2022. They sold it. And it was like $400 something per unit, right? And he rolled
$400,000 a unit? I mean 400 a unit.
Net?
Sorry.
$400.
No,
Cost per door?
Yeah, cost per door is $400,000
Per door.
Yeah.
Got it.
Yeah.
And it might have even been a little bit more than that, right?
Yeah.
And it's A-class, brand new development stuff. And then he rolled some of his money into it, and he was telling me he actually just raised money to buy them back at the same cost to build price they had, which at that point was like $250.
I'm telling you.
Yeah.
And so the transaction never hit the market and never. And I've been saying this too. Like, there's so many transactions. When we were talking with Spencer Cornelia, I was telling him this.
Yeah.
All these transactions are happening
Below the radar.
in the gray because we don't want to tank prices publicly.
Yeah.
Correct.
Yeah.
That's where you got to network with banks and lenders.
So
It's who you know.
So where are you? Let's talk about your business. Where are you looking to buy?
The only place I have a network of anything was the market I've been in for 25 years, Central Valley of California.
So you're trying to buy multifamily in Central.
Yeah, and I'm
There's just
networking
not
with,
that many though. Like how many buildings exist in 20 to 50 units?
There's probably, I haven't.
You can count them on probably two hands.
It's hundreds. No, it's hundreds.
Really?
Oh yeah, they built a bunch of them in the 50s and 60s. Yeah.
In Fresno.
Yeah, there's hundreds, not thousands, hundreds.
Are you in escrow to buy any?
No, because again, you start fishing now.
Why not just send them all letters and since there's only a couple hundred or whatever?
Well, so again, if you're going to be sending letters to the owners aren't motivated. They're bleeding this thing dry, sucking off as much cash flow as they can until they're foreclosed. You got to talk to the lenders. The lender's the real seller, but until the owner sells, they're not motivated.
Okay, I'm gonna just say it. I think multifamily investing is also a terrible idea.
You don't like multi?
No.
Why?
No, because they just don't cash flow, bro. Even in Vegas, if you buy a multifamily 20 units, 60% of market value, they still don't cash flow.
Well, they do if you put 50% down.
Okay, yeah. If you buy it 60%,
I know.
and you put 50% down, and you're in the property 30%, and you fix it up, then I give it to you. Yeah, it might cash flow.
Hey, Zubes, what do you think about what Cardone's doing right now with his deposition and everything else?
I think he's being true to himself. I think he didn't obviously like that, but he's like, hey, if this is going to happen, we're going to record it, and I'm just going to show the good, bad, and the ugly. He's making that attorney look like an idiot.
Yeah.
It's good. One thing obviously Grant just does whatever he wants. He don't care, but which is great. But one thing that I respect about him is like his actual plan has worked. Like he hasn't lost any investor capital.
Nope. Knock on wood.
His returns he's hitting distributions. Yep. Like you've never once heard anybody say, hey, I haven't got my distribution from Grant.
No, he paused distributions the first year of COVID. Everybody did.
Yep.
But it's been clockwork. I think
like
he buying them cash?
No, but what he was doing was he was putting a ton of money down just to make them cash flow. And he was only buying A-class assets and all of those. Now he's attaching Bitcoin and stuff too. Yeah. But like, I guess my point is everyone called him an idiot 5 years ago.
Yeah.
10 years ago.
Yeah.
They're like, bro, you're overpaying for these assets. You're overpaying for these assets. And like, he's the only one left standing.
Yeah.
Everyone else still buying.
He just closed the deal yesterday.
Yeah. He just bought another one.
Yesterday, the day before.
Like his thesis of, I only want premium stuff.
Yeah.
Everybody's like, nah, dude, when we hit we've been in a recession 4 years.
Yeah.
And he's like, they're like, no, they all leave A-class. It's like, no, they haven't.
Yeah.
Like, but everyone else who bought the other stuff is losing it.
And that's why I hope the listeners understand that everything is market dependent, because in Vegas, where are all the multifamily at?
The hood.
The ghetto.
Yep.
Like the absolute ghetto of the ghetto. That's where all the multifamily is here. So to go buy a 20 unit, you're buying it like freaking
I wouldn't buy that.
Dumpster fire right outside your building. So that's why everything it just depends on where you're talking about.
Yeah,
you do. You have to know your market.
And that's where this whole game starts. And really, that's the only thing that starts. The only reason I've been successful is I never got distracted.
You only do Fresno.
Let's be clear, for 3 years, I did 93703, single family home, 3 or 4 bedroom, 1,200 to 2,000 square feet. That's all I did for 3 years. That tight a focus.
Yeah.
So that's how I knew when there was
that's hyper niche.
Yeah.
Yeah.
So single family's dead. Airbnb's dead. What about buying new builds? You said that last time.
So again, I think right now, new builds are cheaper than existing, which is weird.
Yeah.
Right. It hasn't happened in a long time.
Mm-hmm.
I think there's plenty of opportunity to beat up builders today, but you got to be selective. Not all markets are the same.
Yeah.
The last time I saw that was in 2011.
Yeah, right.
Yeah, because I remember I was a realtor. I got my license in 2010. And, the houses were all dirt cheap back then. I mean, 100,000 was the average price.
Yeah.
And then, they started going up. Actually, it's probably around 2012 now that I think about it. And the average home was like 140,000, but there was new builds that just could not sell.
They couldn't sell, yeah.
And dude, I mean, there were new builds for like 130 grand. There were like 2,000 square feet in the Southwest, dude.
That's crazy.
And I was just like, why would I buy the resale beat up home? This is brand new.
Yeah. So again, you can get them cheaper, and the reason they're winning, and they should, is they're buying debt down. I mean, you've been to my house. I got 499 on that house.
Yeah.
Right? When rates were 8. I could not have bought an existing home for what I got that new built for.
Not in the mortgage or as nice.
or with
Like
a
everything
view.
about it was just better.
It
No,
was a
so
sick view. It was a sick view. I give him that.
yeah. So again, there's lots of opportunity.
You're brokey, dude.
I am broke compared to his house. I'm broke. I'm like,
Yeah.
damn it. I need to buy rental.
I gotta shut up.
Maybe he's right.
Yeah, maybe he's right.
got a view.
He made me a steak too. I was like, damn, steak and a view, bro.
I did take care of him.
I just called him a fraud.
Oh, fried. I feel bad.
Just enjoying a coffee with him.
Okay, what about the overall economy?
So again, I think we're in for a very rough 6 months. I don't think the market has woken up to how nasty Kevin Warsh is willing to get this. This is happening in real time. The meeting happened on Wednesday. You and I are recording this on Friday. It's going to be posted next week.
Yeah.
Kevin Warsh is fundamentally having the entire risk profile changed. Debt's going to change. Cost of capital, access to capital. It's all going to change.
When you say, like earlier, when you were talking about how Jerome Powell would kind of give us a forecast of like, hey, for the next
forward guidance.
Yeah, forward guidance. He would just give a forecast like, hey, we're going to be probably lowering rates for the next 6 months. He's saying, Kevin Ward is saying, Walsh, whatever, he's saying he's not going to do that anymore.
Kevin Warsh is not giving forward guidance. Zero.
So people are just going to have to guess.
And when you have lack of information, you raise the risk profile.
Why is he doing that?
Because I fundamentally believe that he does not like how Wall Street has benefited and Main Street has suffered.
Okay.
Right? Wall Street has taken advantage of low interest rates, playing the referee, not playing the game where mom and dad are getting crushed. So Kevin Warsh is willing to have some, like he is willing to see Leopold lose his ass. And he's like, great, fucking another billionaire lost his money, who cares? He's going to see lots of pain at the Wall Street level. You know, mom and dad are going to have their savings account make 4%. Right? Instead of, 0.1 or whatever it was under Powell.
Yeah.
Right? I think Kevin Warsh is trying to help Main Street, and he's going to cause short-term pain.
How do you help Main Street by destroying Wall Street?
Well, again,
because a lot of them have 401ks and, their wealth is tied up in the success of Wall Street.
If you look at if you look at mom and dad, the ones that can't pay for bills, they don't own assets. Right? Today, the K-shaped economy, right? The top 20%, we're living large. 80%, dude's not playing in the game. They have no commitment. That's why you see socialism taking off.
Yeah.
Because they're not owners of this thing. So he's trying to get the other 80%.
How is he going to help the 80% then?
Well, first, it starts with leveling the playing field.
Okay.
And that's by removing forward guidance.
Okay.
That means Wall Street's got to play the game, risk profiles change. But mom and dad, they have savings, they have all these other things. So again, I think you're going to see money market accounts over 4% very soon. Right? They were less than 1% a couple of years ago. Right?
Well, you can get a money market account for 4 or 5%.
You can get them in the 3s today. It was for a time they were in the 4s, but they cut rates. Remember, Powell cut rates 3 times, so they're down. But again, I think what you're going to see is...
I haven't checked mine.
Yeah.
So I thought I was getting 5.
You might have a year ago. I don't think you're getting 5 today.
I don't know.
But again, I really do think Warsh is... I mean, he quit the Fed, which is a very prestigious job, because he didn't like the money printer.
Yeah.
And he is going to do everything he can to...
So why did Trump pick him then?
I think Kevin Warsh is a remarkably smart individual, and he said what Trump wanted to hear.
Okay. Then he backstabbed him.
No, again, if you're Kevin Warsh, you didn't, because Kevin Warsh, all he has to say is, I'm going to cut the federal funds rate. He didn't say the 10-year note. He didn't say the 30-year bond, and Trump didn't ask. So that's what's happening.
At least publicly,
yeah.
Right.
He's always said the Fed rate, the Fed rate, the Fed rate.
Yeah.
The Fed don't cover the 30-year mortgage. The Fed don't impact the 10-year bond. And that's the stuff, by removing forward guidance, the longer you get out, the more risk and the cost is going higher.
So in the overall economy, you're saying you think Wall Street's going to get crushed and it's going to help Main Street, but how?
Yeah, it's not. Yeah.
Like what? What's going to happen?
So I think what's going to happen is you're going to see a lot of short-term pain, which is going to reprice assets, right?
What assets?
So
because if real estate's gone down, that's all we all think.
So it will impact like builder. It's all the new stuff. All the old stuff, as we talked about earlier, mom and dad are fine because it's fixed rate debt. There's not a brewing pain unless unemployment gets to like 8 or 9%, which I don't think it does. That could be the spark that caused residential pain. But I think stocks will be repriced. I think businesses will be repriced. I think talent will be repriced.
So wages are going down?
Well, there's certainly...
how does this help anyone?
In
Main Street.
This is what I think is happening, yeah.
So they're going to get paid less.
Yeah.
Well,
And they're
future
gonna be better
opportunities,
off.
yeah. Well, again, if you reprice, again, what he is trying to do.
But then it's just a wash. If they get paid less and then, assets go, it's a wash.
But then what he's going to do is he's going to cut the Fed funds rate sometimes next year, like Trump wants.
Yeah.
And this cycle starts again.
I'll tell you what I think.
Okay.
I think that there's no going back on real estate affordability.
No.
Like,
Even
I
if it
just
goes
think,
down.
once again, back to everything Cardone has been saying,
Sure.
it's renter nation and it's only accelerating. I think
That's
we just see it.
unfortunate.
It's unfortunate, but I honestly think that dream's over. I don't think that that's
Oof.
part of the American dream anymore for the normal person. Because when you see that it's $2,000 to rent a home or the mortgage is $3,500,
Numbers don't work. Yeah.
in what world are you?
Yeah.
I can't even advise you to buy. You are better off not buying the home.
Yep. Especially if it's not going to appreciate.
Yeah, and because that's the other part too. Not only does it not make any sense today,
Yeah.
it may not make any sense 5 years from now or 10 years
If
from
you
now.
sell in 5 years, you're going to be upside down.
Yeah, and I've never given that advice until the last couple of years where it's like, no, like logically speaking, I can't tell you it's better other than sympathetic reasons to own a home and, you want to.
Yeah, there are some reasons, like if you're going to be there for 20 years.
Yeah, you don't want to move your family. You don't want to risk getting, kicked out. And
You want a dog and your pet doesn't.
Yeah, like so that has value. But like from a just purely economical standpoint, I don't think there's any going
What do you
back.
tell the W-2 employee to do? You guys are throwing stuff at me. What do you tell the W-2 employee?
I think
your
they should
job.
rent a house now.
No, I meant to build
Rent a
wealth.
house.
How do you,
No, but let me just add to this too. Like, and I don't think there's anything wrong with that. This office that we have, we rent.
I'm sure.
And we've been here for 6-7 years. And it's been a far better decision to rent this place than it would have been to buy it. And
Okay.
I'm very happy that we rented it.
Mm-hmm.
And I just feel a different way about my own personal home. But I would have been way better off renting the last bunch of years than owning my home that I have. I'd have been way better off.
Mm-hmm.
And it's made me think about it because it's like you're entering a world that we've never entered before, where prices are so much higher than what you could just rent it for.
Mm-hmm.
And I don't see it ever changing. Like, I don't know how it changes because in order for it to change, rates would need to go down, which then are going to cause prices to go up, or wages need to like finally go up, but we're saying they might go down.
Mm-hmm.
And assets need to go down in price, but there's just too many things that like it's just the gap is so wide.
Is the American dream of getting rich over?
No.
No.
So what do you do?
If you're going to get rich, it's going to start with your job and your active income.
Okay.
And you're going to have to live below your means. You're going to have to build a delta of savings. And then what you do with that delta of savings is going to determine your wealth.
So I've told people for years, the wealth formula hasn't changed in 100 years. You've heard me say it, but I'll do it again for the audience. Step one is create disposable income. Live below your means, active income, whatever.
Grow your active income.
And again, you could do that one of two ways or both, right? Cut expenses, raise income, or both.
Yep.
Right? That's the only three options.
Yep.
Step two, this is where I think we argue the most, is you become elite at something. Is it social media? Is it running a business? Is it buying 93703 single family homes? You've got to pick your thing. And that's where I think most people fall down, is they're distracted.
They're
all over the
mediocre
place.
at trying to figure out anything.
They're mediocre at 17 things.
Yeah.
Go find your thing and go all in.
Yeah.
Like, I believe you could become wealthy trading Pokemon cards or classic Mustangs or whatever. Like, go become that, because
You got
when
an
you're
19 guy who does $20 million a year selling Broncos.
there you go.
He customizes Broncos.
Like older Broncos, I'm guessing, right? To the new, those are beautiful.
I was like, how much does somebody pay you per Bronco? He's like $200,000.
Yes.
Bronco.
Wow.
And I was like, that's a thing. Like,
Yeah.
oh,
So they're all over Orange County. I was just
I was
there the
like,
other day.
what?
Crazy.
That's crazy.
And he's got like, that's his side business. I'm like, so you just flip Broncos on the side and restore them and make them sick?
Yeah.
Like, what are we doing?
I'm like, dude, there's a lot of ways to make money.
Yeah,
in
so
this
that's the
world.
point, is find your thing and go all in, because when you are elite at that, you can see value that other people don't.
Right.
Yeah.
And then the last
He knows the
one,
Bronco market better than
I'm
me.
sure he sees a classified ad and he goes bing, 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 right?
Yep.
And then step three, which people really hate, is you got to do it for a decade.
Yeah. I agree with all that. We don't disagree about any of that.
Yeah.
I think back to, all right, make money. Brian and I, that's what we focused our whole career on, helping people make active income, whether it's wholesaling, flipping, all that stuff. And I think, so we're all clear, wholesaling and flipping still work even in all of these markets. To Brian's point, just if you're actively looking for deals 40 hours a week, because that's your business.
That's what you're elite at.
You can make money no matter what.
And I will tell you, you will do better in the next 6 months than the last 6 months. So I expect you to have a better next 6 months.
Oh, here we go.
I think you're wrong again, brother.
You can have a worse 6 months.
No, bro, because it's going to get bad. Unfortunately, when things get bad, house flippers and wholesalers actually make less.
I agree with that.
Yeah. Well, so again, for the audience, I'm a real estate investor, guys. I've done almost 50 transactions this year. Not 2021.
Dude, you just said 40 like 10 minutes ago.
Yeah. The numbers are changing.
I'll check. It's high. It's a lot of numbers.
It doesn't matter.
But
the point is, when the market
Did you get to
gets
100 this year?
bad, no, probably not. When the market gets bad, everyone does worse. Everyone thinks there's this like, oh, when the market gets bad, that's when I'm going to take advantage and make all this money. No, bro. It actually is harder to make money when the entire market is just crashing.
And that's because you have to exit your opportunity to cash the check. You have to sell.
It's because when
wholesale.
You're wholesaling, that means the home buyers are like, no, the market's going down. I want this. We're making lowball offers, and then they're also making lowball offers. When we're flipping houses, we're making lowball offers, then the buyers are also making
the reason
offers.
that wholesaling and flipping is harder in a down market while it's going down is because you have two different sets of expectations that you're dealing with.
Yeah.
With the seller, it has not happened
It hasn't hit their radar yet.
And so to them, they're like, wait, why are you telling me my house is worth 20% less? It's not. I see the comps.
Right.
Yeah.
Right? Zillow says this. But the flipper and the wholesaler are looking at it like, no, in 6 months when this thing is on the market, it will be this.
Yeah.
Right.
And so when nobody can agree on value, transactions don't happen. This is why it's always harder.
Yep.
Like
I like that.
2022 was the hardest thing I ever seen in my career.
I bet, yeah.
Because you just had this discrepancy of like.
That's why August 28th is a big deal.
Oh, this is why most people are so silly, unfortunately. I remember watching some of these gurus that we know that they were on a podcast, Steve Trang's podcast. They were on Steve Trang's podcast. This is like 2020, 2021. He asked them, he was like, what are you guys going to do when the market finally turns? They're like, oh, dude, we're going to wholesale more. We're going to make more money. And at that moment, I was like, these guys are so dumb. They haven't experienced a bad market yet. And then I remember, I don't know if you remember, when the market turned and everything got super bad. Do you remember a lot of us got on these big Zoom calls with some of the top wholesalers in the country? Like literally the who's who of wholesalers. And we're like, bro, no one's buying. What are we going to do? Oh, we laid people off. Oh, we shut off our marketing. Oh, we're just trying to ride this out until we can come back.
That's what it's like right now.
Exactly.
Okay.
That's what's going to happen at the end of this year.
It's already happening.
It's already happening, but it's going to get worse.
Yeah.
Because it just gets, real estate is so hard already. And with affordability, it sucks. Because again, I want to agree with you. I always tell you that. I'm like, people think I'm just this whiny little bee. I'm not.
He is, but
no. I actually invest.
I don't want to be this way. The market's made me this
way. I actually invest, right? Like you're not in the market right now. I am. It's so hard.
Okay.
So I want people to I wish people could buy rentals and make money. I wish I would do it, but it just doesn't work. So that's why I am officially getting out of real estate and I'm going into the stock market.
Are you really?
I haven't bought a rental this year because I've paid off some rentals. Guess what? Still don't cash flow.
Paid off.
I swear. I could show you a repair request for $6,000. I was like, well, there we go. That was my net cash flow for the year. I'm serious too. I wish I was joking.
You know what I always said when I finally have just tens of millions. The thing I'm gonna invest in is not rentals. I'm just being a private money lender. And I'm getting my 12 to 15%, and I'm like, I'll let you guys, run with your heads cut off and do whatever. And I'm transactional funding.
Yeah,
and that's what I'm gonna do.
What else do you think Trump can do to help the economy?
So really, any president, well, the first thing he needs to do is figure out a way to get us out of Iran. Let's just be very clear.
You think Iran's bad?
I think it's bad and getting worse.
Okay.
And
do you think that's actually affecting the housing market? Because I noticed that transactions really started to dip when.
Yeah, of course.
Yeah.
Yes, war.
Yeah.
Scares mom and dad.
Uh-huh.
When mom and dad is scared, they pull back.
But I thought the economy does better during war.
Some parts of the economy, defense, you just saw Chevron and Exxon report massive earnings today.
Yeah.
Oil, some segments. But again, mom and dad don't like bullets.
Okay.
Mom and dad don't like soldiers dying.
So do you think the longer it goes, the worse it is?
It gets, yes.
Yeah, for the economy?
If we have ground troops land in Iran, that's bad.
And we might have some already.
Well, again, if it's public and it's like one New York Times, I'm certain we have elite operations there. Mm-hmm. But like if we have the,
like 1,000
101
soldiers.
Airborne or whatever it's called, 1,001, whatever it's called. If the Airborne shows up there, that's not good. That's another forever war. People are going to remember Iraq and the billions or trillions of dollars lost.
Yeah.
Not
so
good.
He needs to get out of Iran.
That is number one priority.
Do you think he needs to just pull out and just say, hey, we won. It's all good. And we it was amazing. I couldn't believe we did it. Congratulations.
He just posted today they did a deal with Hamas and something
about Israel. Yeah, Hamas agreed to disarm or something.
Hamas is going to give up their weapons and
but just wait 48 hours.
Yeah, but who believes him, honestly? I love Trump, but damn.
Yeah.
Yeah. But do you think he should just pull out? I know there's not like a political
There's no off-ramp that is there at this moment. There's no good options. I think just yanking it and declaring it a victory is probably the right option. It still sucks and is horrible.
Yeah.
But I just, the longer we're
Vietnam.
There. What do you think? What do you think he should do?
Bro, I don't
do you not know? You can say you don't know. Yeah.
I just golf.
Yeah.
Just golf.
Okay. So pull out of Iran. What else does Trump need to do to fix the economy?
I haven't thought about this. So let me give me a second.
This is good. That's a great question.
So I think the other thing he has to do as the president, right? She only can make so many moves, is he has to clearly articulate where he wants the U.S. to win in technology. So for example, biotech. One of the things we learned during COVID is that people that don't like us control our pharmaceuticals.
Mm-hmm.
That is idiotic. That is a national security crisis.
Yeah.
So he has to declare and get the appropriate funding to say, hey, we're going to be the pharmaceutical capital of the world, and whatever that means in its iteration. We have to own and manufacture stuff that is national security level. So he should declare that. And he could get a lot of, U.S., bipartisan support for that. He has to do that, something like that. And again, AI, the fact that we're talking about, calling out Chinese LLMs is crazy. Just compete, right? Get better.
Yeah.
Right. I think we should do nuclear, right? The fact that China has 27 or 57 or whatever it is, nuclear plants coming up, and the AI race is going to be built on electricity. The fact that we have zero is a problem. So we have some very big problems that the president could go after.
Why don't we do nuclear?
What is it? The thing in New York?
All the hippies that don't want us to do it, or what?
What is it? 7 Mile Island or whatever it was that blew up?
Oh,
wow.
Yeah, something in the 70s or 60s.
I thought it was like some green initiative.
It probably is.
Well, there was something that blew up that was really bad, and we'll just
put a nuclear power plant in Cali.
Yeah.
Yeah, where there are earthquakes, probably not a good idea. Might want more stable land.
Yeah.
I'm just saying. But yeah, I mean, there are some things that the president should do to get. And again, one guy can't do a lot.
Do you think he's doing a good job so far?
I think the fact that he closed the border with the signing of a piece of paper is amazing, and he doesn't get enough credit for that.
Yeah.
That was a problem.
Yeah, the border hasn't been, you don't hear about it no more.
Dude, the record low. I mean, it's crazy. I think the fact that we got into Iran is going to prove to be a tactical error.
What do you think he needs to do to just make sure that he goes down as like the best president ever?
There will be no chance he goes down as the best president.
No.
Half the country hates him.
I know. But what does he need to do before his term's over?
Objectively speaking,
objectively speaking, like what does he need to do? If he could do this, he crushed it.
So let's give him credit.
Not the best president ever, just he crushed it.
So closing the border was a national security thing, already done, check. I personally think the Trump account, and again, if I was, creating things, I wouldn't have called it that because half the country hates it because it's called the Trump account.
Yeah.
But I think the Trump account in 20 years, right, 2 decades from now, is going to be the thing that crushes socialism.
What is the Trump account?
Oh my God, you don't know what the Trump account is? That's probably the second best thing he's done.
Yeah.
What is it?
Free $1,000 for your kids.
A free $1,000?
Yeah.
And the ability to donate up to $5,000 tax free, and it compounds for the next 18 years. So
You
when
can't
your
touch it for
son,
18 years?
no, he can't. Your
can't.
son,
Oh, but I can.
no, it's only it's
So
like an IRA.
basically, they'll
It's like
give
an IRA.
Josh a free $1,000 account that's going to multiply
It'll
Okay.
compound for
every kid in America.
Okay.
that's born. Yeah.
That's
Yeah.
born.
Yeah. And again, if your kid is under 18, you can donate still. But again, we're I think for 4 years we're giving $1,000 for every kid born in this window,
Yeah.
like automatically.
Yeah.
Okay.
And then you can add extra. You can add $5,000 per kid a year.
But you can't do it to your older kids.
If they're under 18, yes.
Under 18.
You can
okay.
donate, but they're not going to give them.
They're not going to give them $1,000. It's only the newborns that.
Okay.
But anyways, I think the Trump accounts can fundamentally push back against socialism because earlier I said we have to have more Americans feel a part of the system.
Yeah.
And in 20 years, there will be 50 million teenagers that have stock.
Yeah.
And they're going to feel like they're going to pull out their, Robin Hood and go, look, I got, 37 grand, or I got this, I got that.
Yeah.
That's how you crush socialism.
Okay. So I wanted to ask you about Brandon Turner and like his fund, right?
Yeah.
Because you want to get into multifamily.
Yeah.
Do you think people should still give gurus money to invest in multifamily?
I have never been a fan. I think the bigger the name, the lower the return.
Okay.
And Brandon Turner is a big name.
So do you think people should give you money then?
No, don't give me money. Absolutely not.
So you're just going to buy multifamily with your own capital?
Absolutely right. That's all I've ever done.
Okay. So you're not going to raise money.
I would never raise money. I do not want that stress. Dude, I already have a good life. Why the hell would I want to ruin it with stress?
I don't know. So you don't think people should invest into other
No,
people's
I think
funds?
I think one of the biggest mistakes in life is assuming somebody else knows how to use your money better than you.
Interesting.
We want to invest in Leopold's fund.
Yeah, I'm invested in Leopold.
No chance.
No one else in real estate.
I actually was just looking it up while we were talking about it. He's still up 80%.
Okay.
So he's still murdering it, even in the worst catastrophic thing. I'm down with it.
Yeah.
I'm down in
Does he have like a fund or something?
Yeah.
Yeah.
Oh, really?
Yeah, it's a hedge
Yeah.
fund. Yeah.
I'll fund him.
Yeah, it's called, do you remember what the name was? I forget.
Yeah, it's called like
Social awareness or something?
yeah, it's like kind of an oxymoron. Situational awareness.
Situational awareness. Thank you.
Yeah.
What about did you look into Brandon Turner's fund and who's the other guy?
Ken McElroy.
Ken McElroy.
Yeah, I'm an accredited investor. I saw most of those deals 5 years ago and said they were insane.
Like insanely good?
No, insanely bad. They were those. I have receipts saying those deals were going to blow up 5 years ago.
Oh, really?
I have
and you
receipts.
had beef with Brandon Turner.
I do.
forgot about that.
I do have.
I
beef.
completely, I swear, I'm not trying to instigate.
I'm not
I
a fan.
forgot. I forgot he had beef with Brandon Turner.
Yeah.
So
Again,
dang.
5%
Do you
rate
have beef with Ken too?
No, I did have beef with Ken when he called for a real estate crash because real interest rates were going up.
Do you have
Yeah.
beef with Brian?
Of course.
Nah. Why do you still have beef with Brandon Turner?
I think Brandon Turner is a marketer. He's not a realist. He's not an operator. I think the only people that win are operators. I think he's a marketing guru. I think he's a great storyteller. I think the fact that he goes out on social media and says, I only work an hour a week or an hour a month or some nonsense is, not a great look.
Yeah.
I think the fact that he says, hey, I'm going to grow my education business by using MiniChat and create this big pipeline and then flip that and I'm going to do this and this. It's freaking asinine.
What is asinine about that?
You're speaking to a group of people that want to grow wealth.
Mhm.
And all you're doing is telling them how smart you are. You are not helping them.
But maybe he is, because maybe they're better off investing into his fund.
Bigger the name, the lower the return.
But at least they get a secure return.
Yeah.
And most of the time.
Yeah,
I mean,
really?
he has $1 billion in real estate. He lost 50 million or whatever it is.
15. But
15 million. Yeah. So
far.
Yeah. So I mean, that you would label him a winner.
Well, it's like Leopold. It's like this.
Hold on. Would you label him a winner or not?
No.
Oh my goodness. The guy with $1 billion that lost $15 million. Now he's not a winner.
I don't think he's, again, you're looking at the scoreboard.
Yes.
And do I think Brandon Turner, the man's a winner? No, I don't think he's a winner.
I'm talking about him as a real estate investor.
First off, I don't believe he owns $1 billion. I believe the value of his portfolio might be $1 billion, but I bet you there's $800 billion in debt on that. So that's not $1 billion in my opinion. He's talking about what his portfolio is worth. That's before debt.
Yeah.
So let's not get it twisted.
I think people are better off investing in these gurus than they are buying a single family rental property.
We disagree entirely.
Well,
I will
you'll
die
agree
on
with
that
me
hill.
next year, because you're already starting to agree with me more and more.
I don't want anybody to give money to anybody.
That's how business works, brother. Welcome to the economy. Welcome to the economy, bro.
No, I meant investment.
Banks give you money. Private lenders give you money.
Fair enough. I want people to do their own work and make their own decisions and live and die on that hill. I don't want them to just trust somebody they see on Instagram and wire him money because he's got a good story.
No, of course not. But
that's what he does.
Yeah, but no. That's not all he does.
What do you think about? So do you think
he has a good story?
I know, like that's.
And how's he not an operator? He has $1 billion in real estate.
I have never heard him talk about operating a multifamily.
Just because you haven't heard him talk about it doesn't mean he's not an operator.
Well, usually operators talk about what they do. All he talks about is how he's building a sales funnel and how he's converting eyeballs to this and how he does this and that. I'm only taking the man at what he produces. And I haven't heard him talk about operating.
He's been teaching people how to do real estate for 10 years. Maybe more. I bought my first rental property after I watched one of his videos. Way more than 10 years. Way more than 10, 20 years, 30 years.
No, not that many, but 20.
20 years. I bought
he's only like 40. It's hard to be doing it.
I actually told Brandon this story.
Yeah.
Long story short, there was a night, 4th of July. I was like, dude, I need to buy a rental property. I made an offer, got it accepted, and I was about to cancel it because I was so scared. And then I watched his video, and after watching his video, I was like, oh, okay. I was able to do the math, and I bought my rental property because of Brandon Turner.
So again, so this is my experience. And again, I've had beef with him, so very jaded opinion, admittedly.
Yeah. Okay.
So Brandon Turner starts out as a one rental at a time guy, right? He bought a duplex or something.
This is where the beef comes from.
He's the original. Pretty much. Actually, that's not far off. But again, he started very, very kind of in my wheelhouse.
Yeah.
Right? And then he started doing mobile homes. Again,
he ascended.
And then he figured out it's easier for him to raise money than run deals, his own deals. And that's where he jumped the shark, in my opinion.
So you're saying he doesn't run his own deals?
No, I believe he has people, and he's also. I mean, you could look at this deal.
Team. Yeah,
he has a team, but he is not an operator. He is solely focused on raising money.
Oh my God, Michael Zuber, bro, you don't use English. You just make up your own definitions, bro. You're not an entrepreneur, but you're a W-2 guy. He's not an operator, but he has $1 billion worth of real estate. How is he not an operator? He has $1 billion in real estate.
Again, in real estate, you can be very good at lots of different things: raising capital, running buildings. And,
is raising capital operations?
It's all he does.
Is raising capital operations?
No.
Yes. How can you do operations without capital?
Like earlier, you asked me what I did in my portfolio. I secured deals and raised and secured capital and found deals. I did not run the books. Olivia ran the books. Olivia ran the.
But they still got done. Someone has to do it.
What was I uniquely good at? Finding deals and securing capiple. I am not telling you I'm
Were
the
you
best.
an operator?
No, I was finding deals and securing capital. But my wife was
rentals.
Who was my operator?
My wife, Olivia, was running.
Was she a property manager too?
She was managing the property manager. Yes.
Yeah.
The point. Yeah, I don't know, but
I mean, it just goes back to what's your role in the organization.
Yeah.
And again, he is uniquely good at raising, and he should. That's what he's good at.
And buying deals.
You think Brandon Turner
successfully running them deals? I mean, he's been running. He lost one. So if he didn't lose that one, then would you say he was a good operator?
No, I don't think he operates. Dude, he says on record he spends an hour a month on his properties.
But why does it matter?
20 doors.
Why does it matter how much hours he spends?
You are not operating a $1 billion portfolio with 1 hour a day or 1 hour a month. That is fundamentally impossible.
Yeah, I haven't seen the exact quote, but I hear people quoting that all the time.
He said it. Google it.
I brought that up when, who else was here? Who did we talk? Spencer Cornelia. I was like, hey, I was kind of giving the objections, and that's like one of them that I've heard.
Yeah, I mean.
Do you think he's an operator?
I think he's a business owner.
Yeah.
Okay, that's fine.
He's not the COO in his company. He's the CEO.
Yeah.
That's fair.
I'm not in the day-to-day of any one business except golf.
Yeah.
I'm heavily involved.
Yeah. You're actually doing the
4 hours later.
I'm heavily involved in operations. I'm on the course with these guys.
Yeah.
I'm in the trenches.
Yeah.
But yeah, I mean, all we're describing is your role in the business.
Yeah.
Like, what's your best and highest use in the business. So.
Do you think it's better for someone to invest into a proven successful operator, business owner, or go out and buy their own rental property.
Well, the thing is, if you're only focused on operations, then who's focused on the marketing and the sales and all that stuff, right?
Yeah.
Like, I remember Cardone would always say, hey, my number one job at this company is to get attention.
Yep.
You know, all I'm supposed to do is just get attention, get us leads, get us eyeballs, and all those things.
Marketing over sales, I think I've heard him say a couple times.
Yeah, and then like, you know, and he used to be the sales guy. He don't even worry about sales anymore.
Nope.
He only worries about marketing. And then he has a guy who only worries about sales. And then he has, you know, the guy who's in charge of managing all their properties, the guy in charge of managing all their education, managing 10X Health, like, you know, so every business has an operator in him. He's definitely not the operator.
He's not the operator, but he is the main guy. Like everything
He's
succeeds or fails.
He's the
on him.
Visionary. He's the name. He's the brand. He's all of that.
Yeah.
Yeah.
And I'm just not I'm saying
basically anyone you see at a high level in business is that guy.
Do you think people are better off investing into someone else's a successful CEO or going out and buying a rental property every year?
Well, what do you think when you buy a stock? You're buying into
a
CEO.
Exactly.
And a company.
Yeah.
It's the same thing.
So what would you say?
I mean, when you buy a stock, it's no different than investing in Brandon's fund.
Exactly.
It's no different than investing in, it's the same exact thing.
Yeah. So where do you think people are better?
But one's more liquid than the other.
I was going to say, you can change your mind on a stock, not a fund.
Yeah. Well, you could invest in a REIT too if you want to get liquidity.
Yeah.
Yeah.
But real estate, just by default, it was never meant to be liquid.
It's not that's either a plus or a minus depending on where.
Yeah, and in Cardone's case, he spins it as it's a plus.
I think it's a plus too.
Yeah,
How much?
Because you just let people who have, you know, what do they call them? They don't have diamond hands. They got
stone hands or something.
No, they just
The opposite of that.
the opposite of diamond hands. They just the moment anything happens, they're just like, get rid of it.
Yeah.
The world's falling.
So how much capital are you going to have to use to buy a 20 to 50 unit property?
Well, there's going to be the down payment, which probably be somewhere between $300 and $500. And then the problem with buying these distressed assets is I'm going to have 2 years of very heavy lift and negative cash flow, which is probably another 100.
Negative cash flow.
What?
It's probably another 150 grand or whatever. Because these things are going to be
and just negative cash flow.
It's going to be.
Well, it's because it's a fixer upper.
Hold on,
it ain't
just
going to
to be
make
clear. You're not talking about fixer upper 100 grand. You're talking about just negative cash flow.
Yeah.
The rehab is going to be like another 300 to 500.
No, certainly six figures.
Yeah. So you're talking about you're going to spend somewhere close to $1 million.
Probably all total cash over a 2-year period. Yeah, 700 to 800 grand.
Okay.
In my own capital.
In your own capital. And then you're advising people to go out and look into large multifamilies.
I'm not saying that. God damn it. I'm saying go get a buy box. No, you asked me what I'm doing.
I know.
Not most people can't stroke that check. I've never said most people can.
But I asked you, where's the opportunity?
The opportunity is to have a buy box, be fundamentally disciplined, write disrespectful offers, follow up 17,000 times, and get something significantly below market. Walk into 6 figures of equity.
Do you think,
but not
you said other people shouldn't invest with, your people shouldn't invest with other people. Do you think that they should raise capital themselves to do what you're doing?
Again, that's just not a world I'm comfortable with, and that's just who I am. I don't like that.
So you say no.
You don't like them raising capital for themselves.
I don't like
getting 100 grand to get into a deal.
So where do I like it? Where do I don't? I have no problem and have raised over $10 million in debt. Because if I lost the property, they could foreclose or I didn't pay.
When you say debt, you're just talking banks.
No, private money.
Okay, so private money. You're okay with private money.
So you have raised private money.
I'm trying to be very specific with you.
Okay.
I have raised debt. So 10 to 12% interest. They had a mortgage. They were essentially the bank.
Yeah.
They're not equity partners.
Yeah.
Okay.
Because you're saying
but you have raised private money.
They're equity
partners. Yeah.
There's a very different.
Are you okay with people raising debt to go buy these properties?
If they can get a fundamental return, because again, debt can kill you. But yes, absolutely.
Okay. So the same way we raise debt for flipping houses.
Yeah.
So you're okay with people raising
it's
money.
The LP, which is equity, not debt, which can be wiped out to zero. If I fail to pay, they have the legal right to foreclose and take the asset.
I get what you're saying. Yeah.
Very different game.
Yeah. Okay.
But in most cases, those people that they're going to raise money from are second position.
Depending on the deal. I mean, half and half. But yeah. I mean, I did Burr before it was a thing. So I first position.
Well, I'm saying though, like if somebody's going to go buy a $1 million property, let's just say.
Sure.
Odds are they're probably not going to raise $1 million from
it'd be a
They're going to go get 80, 70% from the bank and raise $200,000-300K from friends.
As a second in that case, correct.
And if they lose, those $200,000-300K is gone. It ain't.
Can be, yeah, for sure. That's why they need to be very, very careful.
Yeah. So
what's the point of you doing this? I don't even get it.
Of doing which? I'm sorry.
Buying this 20 to 50 unit property. What's the point?
Because it's the only thing that's going to move the needle for me personally in my family. Right.
Okay.
Right. It's going to take.
I think Davila's like, why not just chill out?
Yeah.
Well, I have
or
been
like
for a couple
invest
years.
that $800K into stocks.
I don't trust the stock market. I think the market. I was involved in. I grew $7,000 to 200, only to see that turn back to 40.
Let me ask you this question. So this is a personal thing I've been pondering for myself too, but do you feel like part of the reason you want to go do this deal is to kind of prove to yourself and your audience that you still can do it?
I'm sure that's some level of it. So again, the other thing that we haven't talked about is at 65 and I'm almost there, we're going to liquidate unwind the portfolio. I'm 54.
Okay, like 10 years. Okay.
Yeah, but I mean, in the grand scheme of things, it's closer than I want to admit.
Yeah.
And I've never met a 65-year-old landlord that does a good job. So I only got one cycle left.
The reason I'm bringing it up is because, I've been wholesaling and flipping for a long time and, we do education, all these things. But, I have been pondering. I'm like, man, at what point does this become a distraction when, M19 is growing so fast, so rapidly, and such a bigger opportunity? And then, even if
this other one is brain damage. Yeah.
Yeah.
And it's trending in the wrong direction.
And it's a very difficult market. We all talk. And then so I just think in my mind, I'm like, I'll never stop doing real estate. Like I'm gonna buy our next office space for what we do. I'm gonna buy personal homes. I'm, probably never gonna buy a single family rental ever again. Right. Well,
I will agree. I mean, again, so I'm in the same boat, right? There was a years I was looking for the next house, duplex, quad. And I'm like, none of this stuff moves the needle for me.
Yeah. And
Vegas, right?
Well, I was looking at Vegas. Yeah. Buying Vegas.
Did you buy one?
No, I bought the big house up there.
But you didn't buy a rental in Vegas.
I never.
And you were looking for years.
A year.
A year. Okay. So that's.
And again, the reason
that doesn't look good. That doesn't look good when the real estate guru telling you to buy rentals can't buy a deal.
Well, you see, that's the problem. I could have bought a deal, but it's not going to move the needle for me. Right? There's the whole brain damage. Like I'm not in wealth building mode anymore.
Then that's kind of the point I'm bringing up too, where it's like, hey, we'll see next year what I choose to do based on how this thing grows, based on how the market is, based on, hey, can these things run truly without
by themselves?
Me? Yeah. Like all these factors are going to determine what the choice ends up being. And for me and my brand anyways, if I never did real estate again, I don't really care. Right. Like personally.
Yeah.
I'm just an entrepreneur at heart. Real estate just happened to be the thing that worked.
The thing that popped.
Yeah. If it stops working, if she don't love me back, it's all good.
Yeah.
It's all good. I don't care.
Stage left.
I literally don't care.
Yeah. Right. Of course.
But I know that your brand is real estate only.
Yep.
And
one
it's
rental
like,
at a time.
Yeah. For me, I can go move and shake and everyone's like, whatever, that's what he does.
No, I think there's absolutely some of that. And that's why, again, I have receipts. I tell people in my audience what I'm doing. 4 months ago, I think we had this conversation. I raised $1 million, sold a couple assets, did some cash out refis.
Nice.
Because I want to go shopping. Okay. So again, there's definitely some part of me that wants to put another scalp on the board.
Yeah.
But I don't have to. But that's why if I do,
you don't have to. That's the point. It's
that's
the point of me asking.
But Brian's point, I guess, too, is like if you do, this YouTube thing for the next 5 years and do nothing, then it's also not a good look.
I don't know that that's true because again, I'm an economics guy and that changes every day. Right. So again, my brand one rental at a time, sure. But again, I have receipts that it worked. I have other people that come on the channel every week that it works for. Yeah. It's not just me. I have 12 other millionaires. Yeah. And they're all doing deals. Yeah. Right. I'm just a 54-year-old and Olivia's a little older than me. So we're really close to the end of this game.
Yeah.
So, I'm only going to do another one or two deals and one or two more scalps. It has to move the needle. It has to be worth the lift. Because I'm signing up for 2 years of pain with these ugly apartments.
What do you think?
That's what I'm asking. What's the point? Like, how much of a lift is that apartment actually going to do for you?
I don't know. Once it's done, it'll probably be 7 figures in additional net worth or more minimum, and $12,000 to $15,000 extra cash flow
a month.
Yeah, a month. Like,
isn't there just an easier way to make $12,000 to $15,000?
Well, but I guess the point is
not every month.
To Brian's point, I don't know that. Does that really move the needle for you? Your portfolio already makes 6 figures a month.
Yeah.
Your net worth going up $1 million. What do you do?
Yeah.
It does. That's why I'm like, is it more of an ego thing?
It's certainly an ego thing. Again, when you're in the game, you're type A. I made my name in sales. I have one or two more battles to win.
That honestly, I'm just bringing it up because I've been thinking about
It's like Mike Tyson going out there to fight Jake Paul. That's what's. You're like, why is he out here in booty shorts? Like, there's no reason.
Well,
Mike Tyson,
The knee brace was rough.
Mike Tyson's was the exact opposite.
yeah,
His had nothing to do with ego of still proving he can fight. It was all for the paycheck.
He needed
Yeah.
the money.
Yeah, like that's the exact opposite.
Yeah.
He doesn't need the paycheck. He wants to prove he could still do it.
yeah.
I am trying to prove to myself,
That you can still
very
do it.
clear,
Yeah.
that I can get one or two more scalps.
Yeah.
Okay. Because if it was me, I'm like, bro, that sounds like hell. Let me go buy a multifamily that's not cash flowing, fix it up for 2 years, hopefully stabilize it, refinance it,
But
just
again,
to make 12 to 15K a month.
I know.
Yeah.
That
It's
sounds
definitely
like
not
hell.
about the money.
That sounds like absolute hell. You could
Yeah.
Yeah.
start a wholesale. You could invest into a wholesaler and help him build
So
his
let's
business.
talk about that, because this is our minds just fundamentally work different,
Okay.
and this is
Well, we're
important.
both entrepreneurs, so they shouldn't. But
No, I don't think that's
Just
true.
3 entrepreneur
yeah,
butts.
just 3 entrepreneurs.
3 self-made.
So
entrepreneurs.
when I look
You
at
hear
what
that, Millennial
who've raised a
Mike?
lot of debt.
Millennial Mike, I know you're watching, brother. And who's the other guy? The lazy lumberjack? What's his name?
the lazy landlord or the lumberjack,
The
They're two
lumberjack.
different people.
They are
Yeah,
two
the,
different people.
the lumberjack tried to call me ugly, bro.
Bro,
Yeah, you look. You were on the live with him, bro. I saw that.
No, okay, all right.
Yeah,
Ugly.
try to call
Wow,
me
that's,
ugly.
that's kind of
I'm like, this fool
That's
called the
brutal.
kettle black, bro.
yeah.
This guy's like a fat, long-haired, long beard guy trying to call me ugly. I'm sorry. Go ahead. Sorry.
Dang.
So when I look at the apartment building, again, my world, so again, what is my job? Find the deal, secure capital. Well, I've already secured the capital. I just
Okay.
told you I did that 4 months ago.
You
now
raised $1 million?
Over a
Well, he
million
sold
bucks.
properties.
I sold 2 and raised more with cash out refis.
Oh, okay. So just your own properties.
Yeah,
Got it.
again,
okay.
my own stuff.
Okay.
So I have the money sitting there, money market account, 3.7, whatever, is just chilling, waiting. So I'm networking with banks, commercial banks, talking a couple times a week, and I'm waiting to get that phone call saying, hey, we got one. Because these deals are not going to hit the market.
Yeah.
They're back to the point I think you did with Spencer or whoever it was. These are not coming on the market. They're going to be made with phone calls.
Yeah.
And
That's how most multifamily is.
I want to get one of
Yeah,
those phone calls.
multifamily's all relationship.
Yeah.
I want to get one of those phone calls. I want to take it down for 50 or 60 cents on the dollar.
Yeah.
And then the asset's going to be a big pile of steaming shit with terrible tenants and evictions
Oh
and
my
no
God.
maintenance.
That's Brian's
I'd rather-
point. It ain't worth it.
Yeah.
But see, I don't worry about any of that.
Yeah.
I live in a completely different state. I
You
got a
think
team
so?
on the ground that
Yeah.
runs it. I get a bill every week.
You think so, brother?
I know so. I've been doing it for
I mean,
25 years.
I live out. I don't live in the same town as my Reynolds either, bro. And it's still they sent me a
It's a headache.
$6,000.
Yeah.
Hey, your sewer line just broke. Okay.
Yeah, well, I got a big reserve account that it just
Okay.
comes
But what was
flying
your
out.
question?
So again, I look at that and go, that's not a lot of work. That buying that multifamily, because all I have to do is find the deal. That's the hardest part. Find the deal. Once I buy it, I got a whole team that I just pass it off to, and I'm a checkbook.
He's got an operator.
He's
I
an
am not
operator.
the operator. I never said I was.
Okay.
Yeah.
Right?
So what's your
Not
question?
one person here is an operator.
But back to your
I'm
point,
operating.
but you said, wow, there's a lot of better ways to make 15 grand a year. Are you freaking kidding me? I don't want employees. I don't want a marketing
But you
budget.
have employees,
I don't want,
brother.
don't I have
Oh
a
my
single
God.
employee?
Oh, you guys, you don't use English. You make up your own.
I have
crap.
no employees.
Okay, your property manager, sure, they're not your employee, but they still work.
Well, now
for
we're
you.
not using English anymore?
But they still work for you. Okay, you hire contractors.
I have a property manager who has an employee that works for them, that they are my phone call.
What about the contract? Are they also providing the contractors?
They do have the list. Yeah, absolutely. Yeah, they do it all.
And they pick it all and all that stuff.
Well, I do control the paint colors and all that. I
okay,
have
so
a-
you have to do some work.
no, I have had the same set of criteria
First off,
forever.
The technical definition for what he is self-employed.
Yeah,
Fair enough.
yeah.
That's the technical, if you want it, dictionary definitions.
So we're all self-employed.
Because you don't have a W-2.
No.
You don't
Yeah.
have a W-2. So
Yeah.
nobody employs any of us.
Yeah.
Nobody
Okay.
employs me.
So you're either a business owner who has employees or you're self-employed solo.
Yeah.
I'm a solopreneur is probably
It's called self-employed.
Yeah, you're
self-employed.
self-employed.
Fair enough.
So-
Yeah.
Okay.
Yeah.
So what was your question?
So he is still an employee because he's self-employed.
There you go.
I look at what you said. There's easier ways to make 15 grand, and that freaks me out.
How?
I got to do market. I got to do this. I got to do that. I got to run 17 systems in 4.
No,
like-
hold on. You raised $1 million?
Yes.
Okay.
I signed 2 loan documents and sold 2 different properties.
Okay. And you're asking, is there an easier way to make $15,000?
No, that's what you're telling me.
Yeah.
This whole buying
Yeah.
the multifamilies there's easier ways to make 15 grand.
Yeah.
A month.
Mm-hmm. There is, for sure.
And I look at that and I go, are you kidding me? I got to have employees and marketing budgets.
Well, you could sit in the owner's suite.
And I don't know what that looks like. That's what I'm trying to tell you.
No,
that
you do
freaks
know what
me
it looks like. You're going to do it the moment you buy this. You're chilling. It's the same thing.
Yeah, because I've done it for 25 years. That one chair,
Yeah.
I am very good at.
I think
chair
you
that you're
do
telling
some
me about,
new stuff, bro. You're just
why do new stuff? My life's amazing. Why would I want to get in a new chair just because it's new?
not just because it's new, just because there's easier ways to make 15 grand.
There's not a place on the planet for Mike Zuber to make 15 grand a month. Mike Zuber is very good at that one chair.
What about growing your social media? Because you already do that too.
I do.
You could easily make 15K more doing that.
But again, it's not my mission.
Embrace your guru.
Yeah, embrace your guru. Lay down this W-2 mindset.
I think about that all the time. I've talked to Graham Stephan about it. We had some lunch together. And I've talked to other folks that are big in the game. And they're all telling me, yeah, if you did this, this, and this, you could be selling $10,000 this and $5,000 this and be making millions of dollars. I'm like, that's not my mission.
What's your
mission?
One
15K package a month and you're at 15K.
But that's not my mission. I don't need the 15 grand.
Then why are we doing
apartment?
Because I want to put a scalp on the board.
Yeah, okay. It brings back to what I originally said.
Just
it's
ego.
An ego.
Yeah, I mean, I agreed.
Now we're getting to the root.
Yeah.
So my mission
ego is not your amigo.
Okay. So here's my mission. And you can go back and watch video number 1 of 18,000 videos.
That's insane that you've made 18,000 videos.
18,000 videos.
I think we first did the interview. You were at like
12.
Yeah, it was like 12,000 videos.
I do 3 videos a day, 365 days a year.
That's crazy.
We were talking about persistence because I don't think he had 50,000 subs yet. It was like, he's made 12,000 videos and,
It's 42,000 or something.
Yeah. And people would have quit.
I think I
11,000.
I think I made
20
long videos on my Wealthy Way or the Way page and got 120,000 subscribers.
I did
but
not
I made
do that.
20 videos.
Congratulations. I did not do that. And I have not and will never do that.
Yeah. Well, you could, but.
Again, so what's my mission? This is important for me because I think it's very different. And I shared it on your stage earlier.
Yeah.
My only mission since retiring and finding my thing, the thing that keeps me up, is I want to create something that lives me by 50 years.
He wants to be remembered.
I want to be positively remembered.
Yeah, you want to be remembered for the next 50 years.
After I'm dead and gone.
That's an ego thing again.
That's an ego thing. It's all driven by ego.
That's all I want. I want somebody to say, Mike Zuber, help me or change my family's trajectory.
I told you this before on camera. I was like, bro, it's not going to happen. Because
I'll take that bet.
Because no offense. And it's not just
plenty of offense taken, but go ahead.
No offense.
Plenty of offense taken. I'm already upset. You've seen me get red. I was very disrespectful.
I'm sorry. But I've told you this before. I was like, bro, people's memories are so short. Like,
if I bring, what? If you are on my family, I want you to tell Brian how wrong he is. Because many of you reach out to me and tell me about how your kids are now hearing me at 8 years old in the backseat. Is that Zuber?
Yeah. So in 10 years, when them kids are 18 years old, brother, they ain't thinking about you. Unfortunately,
again,
even right now,
it doesn't matter.
You know, there's kids right now who don't know who Kobe Bryant is.
I do,
and he just died 5 years ago. There's kids right now that literally don't even know who Kobe Bryant is, who achieved 1,000,000 times more than you
have. 1,000,000 times, yeah.
And they already forget. People and I'm not saying because you didn't do a lot. I'm just saying.
You know what? That's still my mission.
I respect the mission. I respect it.
And I'm going to keep at that mission.
You know, the only time I got offended, this guy sent me a DM yesterday and he was like, hey, dude, do you want any help with your smile? Oh, and I was like, dang, dude.
Ouch.
I thought my teeth were pretty good. And I was like, wow. He's like,
you get a different level of hate than I do.
We could fix that, you know? I'm in SoCal and I was like, wow, okay. That was not one thing I thought I needed help with. Yeah.
You went to bed last night.
I was like, wow. And I'm like,
yeah.
Just looking in the mirror, like, maybe he's right.
Yeah.
I'll remember you in 20 years, just to be clear. I'll remember you in 20 years.
I'm going to remember this conversation in 50 years.
No,
so, but again, one person.
Yeah. But at the end of the day, it doesn't matter if I achieve it or not. I am going to wake up every single day with that mission.
It's like Gary Vee buying the Jets.
Yeah.
It's just, I believe, again, we've already talked about it. I don't need to do anything.
Yeah, exactly.
I already spent 6 weeks out of the last 8 out of the country.
Exactly.
Right. I'm good.
Yeah.
But as a type A person, I need something to battle.
Can I give a piece of feedback that I think would help you accomplish your mission?
Please.
Okay.
I really only think it happens from books. Like I just look at, okay,
That's probably true.
look at obviously the Bible, 2,000 years.
Yeah.
Obviously, we're still crazy about Jesus.
Yeah.
2,000 years later, everyone who wrote in the Bible,
most
right,
published book ever. Yes,
right.
The Quran.
And then I think, we don't like that, but I think, just think back like 100 years ago, people are still talking about Napoleon Hill.
Yep.
Right.
Think and Grow Rich.
Rich Dad Poor Dad will also be talked
Likely.
about.
Yep.
50 years from now, probably,
I agree.
like a Napoleon Hill.
Yeah.
Content's for sure going away. Like in terms of like, dude, people aren't going to watch my YouTube video 50 years from now.
No.
There's just
No. I agree.
Whatever.
As soon as you stop posting, soon as you stop, the day you stop.
Well,
there'll just be a million other creators.
Some new thing that's just,
That's
whatever.
very
right?
valid. Yeah. So it's books.
I really don't think you can get there any other way than books. I don't see it happening with content. I don't see it happening with, the event I'm throwing right now, this very moment. It's great. It's not going to be remembered 50 years from now.
No.
I like that. Okay, that's very helpful.
I just don't see any other evidence.
And I think you got to get out of real estate. I think if you're going to truly impact people in 50 years, it has to be something besides real estate.
It's fun. I'm glad you brought that up. I'm trying to morph from one rental at a time to everyday wealth builders, because real estate's only one of the many vehicles.
Yeah.
Right. So that's
like even Kiyosaki. I mean, obviously it was about real estate, but overall the arching theme was building
agreed.
wealth,
Yeah.
right?
Mm-hmm.
And his book, Rich Dad Poor Dad, obviously people still talk about him.
I have to give him credit. That's the book. That's the book that flipped the light.
Exactly. So it's not going to be your 18,000 videos.
I agree.
These 7 millionaires you created.
Yeah,
or whatever.
I think because we just had my friend Chandler Bolt on talking about books and self-publishing and all that. And
is he a fan of it? I don't know who he is. Sorry.
His company
he makes
is selfpublishing.com, and they help people. They've helped thousands of people write books.
Nice.
And he was asking Brian, like, what are your favorite books? And Brian was asking, and Rich Dad Poor Dad was just everyone's list, right?
Yeah.
It's like, clearly this is going to be remembered.
I agree with that. Okay.
Think and Grow Rich.
Yeah.
Yeah.
And the Bible and, religious
David
books.
Goggins.
Yeah. Can't hurt me.
Yeah.
Okay. That's
it might
helpful.
be. I don't know.
Yeah.
But yeah, like, I can't think of, like, even if I was to think in media 50 years ago, do I remember any of the media personalities or Hollywood stars
Elvis.
or musicians?
Musicians,
Musicians, because their music lives on.
Yeah.
But it's not like people go rewatch these 50-year-old movies.
What's that Christmas movie that's out every year?
Nightmare Before Christmas.
That would not be the one, but
Okay, I remember Mickey Mouse.
Yeah. Home Alone.
yeah, Home Alone. But there's the one in black and white where.
The Grinch. I don't know.
Anyways,
But the point is, I actually think that's good advice.
I do think that's good. Thank you. I had not thought of it that way. But
Great.
That's so a third book. I have to write a third book.
And I would make it probably not about real estate. I make it that it can appeal to the masses.
Because unfortunately, your last book, the One Rental at a Time book, it will not apply in 20 years. People will not.
That's actually a good point because...
Dude, I have the best points.
Well, if things happen in 50 years from now where we don't know what the real estate market
is. If we're a renter nation, sub 50%, that's a valid point.
Yeah. Even now.
They'll be reading it as an archive and they're like, can you believe they used to do this?
Brother, even now, that book is already a little shaky because rentals, you just said most markets, single family rentals.
You know what's funny about that? Because when I got into real estate in 2010, I got on Bigger Pockets and it was like the 2% rule. You have to have the 2% rule.
Yeah.
And that was literally like the biblical standard of a rental.
And then it was the 1% rule.
And then it was like, okay, that's kind of unattainable. Now it's like the 1% rule. Now it's like, that's kind of like, all right, maybe
like
like
0.75.
Maybe 0.75 is pretty good. Yeah. And then soon enough, it's gonna.
Now it's like just don't lose.
if you lose
monthly.
If you lose $300 a month,
it's still good.
You're doing pretty decent.
Yeah. I'm just trying to help you out because honestly, like again, I wish all these things would work, but like the more I look at it, I'm like,
so you're going to become a stock market investor? Did I hear that earlier?
I probably will. Yeah,
that's a sign of a top right there.
I freaking
that's a sign of a top. Brian Davila
probably will.
In stock,
or it's going to go up and I'm gonna be right again because.
Well, last time you said that your name was Bitcoin Brian.
Well, why don't we? Off camera, we need to make a bet. A year from now, we need to do a podcast and bet stocks or real estate. Which one did better?
A year is not enough time for real estate. You're
a decade.
Conceding
already.
So what about 5 years? Can we say 5?
5 years is fine. A year is like.
But we're gonna have to come up with the details, like a specific house.
Sure.
And all that stuff.
Let's just take the Las Vegas market.
But it can't be the Las Vegas total market. We need to pick like at least a zip code and say, hey,
As long as it can be measured with public information.
Why don't we just do the median price of Las Vegas, which is like
It's published every
right
month.
here.
Yep.
There's no debate about it.
Okay.
5 years from now, would you have been better off buying the median house in Las Vegas?
And then we'll take the S&P 500 at close today. What is today's date? The 29th?
Yeah, but let's also say that you get a 20% discount
31st.
because you're a real estate investor.
Yep.
Okay.
So you get the $500,000 home for
400. Okay.
right?
Yeah.
Okay. So
I'm down.
What ends up being a better investment?
Okay.
And you put $100,000 down on it
Yeah.
because you could put $100,000 there or $100,000 in
Equity. Yeah.
the stock market.
If you had young kids, would you tell them like, hey, when you get older, you're going to get into real estate?
Again, I don't think so. When I hear that question, not to split hairs, it's like a career.
Yeah.
I don't want to tell my kids what to do. I want them to find their passion and their thing.
Of course.
I think building wealth in real
Would you
estate.
tell them to build wealth in real estate?
Yeah, I think, again, real estate has built more millionaires than any other single thing in 100 years.
I used to think I would tell my kids that. Now I'm telling my kids, like, you're going to have to build a business that grows in value. And that's going to be like your asset to retire.
Mm.
It's not going to be buying rental properties. But
I would tell my
Noah, 15-year-old.
So again, if I had a magic wand and Teresa could go from 35, which is my daughter's 35.
Your daughter's 35?
Yeah, 35.
Damn.
Yeah, do the math right there. So
you got a kid when you're 19.
yeah, there
your
you
daughter's
go.
older than me.
Good math. Yeah, I've told you that several times.
Oh my goodness.
Yeah, that's why you're so disrespectful.
I'm sorry. I apologize. You know what? I didn't know you were that old. Honestly, I apologize.
No, this guy keeps.
Okay, I'm joking. Go ahead. I'm sorry.
Zuber's gonna hit you on camera, dude. He's gonna take this mic. And
35. Did you know he had a 35-year-old?
No, I didn't know that.
That's a lot. Do you have grandchildren? No, you have no grandkids yet.
Knock on wood. Not yet. No. Where was I going before I got so irritated?
Okay, sorry.
I have no idea where I was going.
Are you gonna still invite him to your thing?
Absolutely. I want to throw chum in the water and let them.
Yeah, I'm talking into like the line.
Hey, what do you know? Do you have a date?
Yeah, 16th and 17th, Martin Luther King weekend.
That's January.
January 16th and 17th.
Okay, January 16th. It's in Vegas.
Because my people work. They can travel home on Monday.
Okay.
When you said my people,
yeah, are you talking about Black
King?
people?
I was like, what?
My tribe. What do they call it? Most of my people have jobs, and they would rather travel home on Monday where they don't miss work.
Okay.
That's why I do long weekends.
Do you actually know statistically how many of those people have a job?
Well over 80% in my audience.
Wow.
We asked the question. My year one was here. We did the day zero at your event.
Yeah.
And you spoke. And we asked, and Brian was shocked, like, oh my God, this is not who I usually talk to.
Yeah.
That's crazy.
Yeah.
How many years ago was that?
That's 4 years ago.
Do you tell them to start a side hustle?
I don't tell anybody to do anything. I'm not their mom.
Just tell them to make more money.
Again, wealth formula doesn't change.
Yeah.
Make more money.
Yeah.
Become
we all
elite
agree
at
on
one
the wealth
thing
formula.
Yeah.
and do it for
Where we disagree is once you have disposable income,
what to do with it.
Well,
And that's why I think
everybody
everybody
disagree how to make
how to make money.
He wants them to
Well,
get a
no, I
raise.
think we disagree. He's saying the same thing we say. Do whatever you're really good at and just do that.
Just do that. Yeah.
Yeah.
And if you're not
Well, I
good
would
at
tell them
starting
to
a
quit their
business,
job. So
yeah,
we're
but
not in the
if
same.
they can't
You're
start a
telling
business,
people to quit their job?
If they want to make more income, I would tell them to quit their job. Yeah.
Well, I don't know, dude.
That's where I disagree.
Earners.
But if they want to make more, they're
I
probably
don't
gonna
think.
have to-
I know. I do not think there's people who, what I pay them, they will make more on their own.
See, that's
Actually,
why I
no, for a
think
fact, they won't.
That's why I think you're
If
wrong.
they try to start a business,
How
Most
much are you
businesses
talking?
fail.
Let's talk about how much are you
hundreds
talking.
of thousands.
100,000,
No,
200,000.
I'm talking like over 300,000.
Okay, 300,000.
Yeah.
Okay.
They
If
will
someone's
not
making-
make more
If
starting their
someone's
own
making
business.
over 300,000, then yes, I would agree. Hey, it's probably better for you to just keep your job.
Yeah.
What about they're making 50,000?
Well, if they're only making 50,000, there's either they're not motivated or they're fine. They're just like, you know what, 50K is good. Well, I guess that leads to not motivated. They just
Yeah.
don't want to make more money.
Yeah.
So I don't think a business is going to help.
Yeah, I think people making 50 grand, if they're comfortable and happy, most people most people fail at creating a business. The failure rate is astronomical.
Mhm.
That's where you're misguided. You guys are unicorns.
I do think the 50K people should try to create, like, on the side.
They should have, I agree with that as well. Everybody has a hobby. Everybody has a hobby. And most of them are my age. They have a hobby they've loved for decades.
Yeah.
Where they like Graham Stephan talks about this. Like find your thing and create niche content. You can make 50, 60 grand just on YouTube. He talks about that all the time.
Do you love real estate?
Do I love real estate? No, I love the game of finding value, putting the pieces together. It's a puzzle to me. I don't love real estate. No.
I just was thinking of Anchorman. Do you love lamp?
Yeah, do you love lamp? Yeah, I love lamp.
Yeah. Do you really love the lamp?
Yeah.
I love lamp. Yeah, I don't like real estate, honestly. But
Yeah.
It's just the way that it's just the skill that I built over 25
I like
years.
creating good content.
Do you think
Like,
you
I
have
love
to
that.
like what you do?
No.
Yeah.
Most people don't like what
Dude,
they
No, I totally, this whole follow your passion thing,
Yeah.
I think it's already rich people telling you what to do.
You know what? I was thinking that too. I was like, I don't like real estate either, but like I like the result that's given me, right? And all these years. And now I'm like building a business that I actually do like with golf. And I'm like, maybe following your passion can make like,
Yeah.
it's doing better.
Did you watch Cole Gordon and Sam Ovens' podcast?
I did.
You didn't?
No, I did.
Oh, what'd you think? He talked about how like the guru space just lacks soul.
Yeah.
And how like the passionate people are the ones that like Michael Jordan, Elon Musk, all these people, like the passionate people are the ones that become the ultra wealthy because they will just
carries them through all
naturally
this
do
stuff.
what needs to get done. Where most people, once they make enough money, they kind of just fall off. They're like, I'm good.
That's what
I don't wanna do this
that's the
anymore.
famous thing with NBA guys, right? They get in the lead, they get the check, and they're no longer motivated.
Yeah.
Yeah.
What'd you think of that podcast?
I didn't see it.
I mean, I know both of them.
It was a great podcast.
Yeah, it was a good podcast. I think it was interesting how, and we'll definitely have, Cole, he was in here last month. We just missed him. But I thought it was fascinating how Sam had just sold a bunch of people into his mastermind and then wanted to basically shut it down to start school.
Yeah.
But he'd have to refund millions. And so he had a dilemma of like, do I just finish this out? So, fulfill my obligations and delay school? Or do I figure out a way to pay everyone back? And he basically just raised the money from the people who just paid him
Yeah.
to pay him back. So he just said, hey guys, I'm going to start this new thing. Anyone wants to invest? Here's the valuation, whatever. And he raised like $5 million from the mastermind to then give a couple $1 million back to refund,
Good for him.
whoever.
Yeah.
And I'm sure some of those people who just paid him converted that money to just equity in school.
Yeah.
And it's now worth
Really
a lot
well.
more.
Yeah.
Done
And
pretty well.
then he just, basically quit the guru space and went all in.
I'm gonna send you the podcast.
Yeah, I didn't see it.
It
Okay.
was one of the best podcasts I've watched because it was just fascinating because he was like, it's fascinating to watch people that aren't really trying to sell you anything, where they're just like talking through their life and their businesses and stuff like that. It was just really fascinating. Did you get to the frequency part when he was talking about people getting into the world frequency? He has,
I don't remember that part.
Yeah, he has a weird
New agey
thought
thing.
process. Yeah, it was towards the end.
I mean, that I was thinking about what he said there because as I just shared with real estate, I'm like, man, I have this unique moment in time to blow up M19 where there's not really any competition.
Zero.
There's none of these things. It's clearly better than everything else combined. And if I was coaching me, I'd be like, why are you even doing anything else? There's no point.
Yeah.
Right. And it's not that the other things are bad. And that's the point I'm making to people. Even like out there, I'm like, wholesaling's not bad. Real estate's not bad, but it could be bad for me.
Yeah.
With the other opportunities at hand. And, it's like, it's an identity thing of, well, I've spent 10 plus years being a real estate guy. And,
Yeah. You gotta buy
doing this and that. And then, like there's a lot of factors that go into it. And I'm like, but, and if the real estate market shifts in a good way, because we've been in a tough time for all these years. So it's easy to just be like, this sucks.
Yeah.
Mhm.
But a year from now, 2 years from now, when things are back to
It'll come back.
easier,
Mhm.
you're like, man, should I have stayed in or whatever? So I don't know. Like I related to it.
Yeah. Do you know who Sam Ovens is?
I do, yeah.
Yeah.
I just didn't see the podcast.
Yeah. He
Yeah.
told a story too where he said he was getting into like building apps.
Yeah.
So he found a coffee shop and he was like, how like coffee shops will give you that like a stamp card
Yeah.
after so many?
Yeah.
He was like, it'd be a good idea? I'm going to build an app for the coffee shop So he like made a mock-up and went to the owner and pitched him his idea and his mock-up. And the owner was like, "What's wrong with my card?" And then he was like, he said the F word. He's like, "Freak." And he just left because he was like, "Damn, that was a bad idea."
Oops.
Yeah.
Well, he talked about how he did multiple things that all
Exactly.
failed.
Yeah.
Yeah, he tried a
was-
lot of crap
yeah.
that didn't work.
Yeah. So he talked about that, like how he would like get ideas, start it,
Yeah.
pitch it, fail. And then he
Ready, fire, aim.
Yeah. And then he got I forgot how he got the idea to like pitch people before he made the product first. And then
Instead of
once he
wasting
did that,
the time.
yeah.
Yeah.
And then
He's like, that's a little smarter.
Yeah.
Good idea.
Yeah.
Yeah. That's kind of how I feel too. Like, I don't know. I just think about life as an entrepreneur. And I've started now, I don't know, 20 businesses. And I feel like I'm finally at my best one yet.
Mm-hmm.
And
Do you think, I'm going to ask, if you would have started this at business number 1, do you think?
no, it'd be nothing close.
So all those 19 it helped.
Yeah. And, the 19 are a mix of successful ones, failures, all
Mhm.
these things. But it was like all the skills learned have led to this one.
Mhm.
And I'll continue to learn more skills. But like, I just think, I don't know, to Sam's thing, you got to throw out a lot of different ideas and offers to see which ones actually
And
fit.
back to the average person, I think the average person does that and feels like a failure and doesn't do it.
They quit after one.
Yeah. I think another thing I've learned from Ryan is like I used to tie my identity in what I did, and I no longer do that.
Well, so what is your identity?
My identity is in Christ.
Okay.
So like I literally, that's why we were talking off camera and you're like, "Oh, your page made this much money." Like, I know you're doing it for money. I'm like, bro, literally
Okay.
not at all. Like
Yeah.
I could literally make zero. Well, I do make $0, but like
With the production.
yeah, with the production and all this stuff. But like, that's where I find my identity and in like my family and like in just myself.
More
Or
grounded.
before I was like, I'm a real estate guy. Like I'm a real estate agent. Like I got to be the top agent. I got to be the top wholesaler. I got the top investor.
Yeah.
I got to be in with the investors. And now I'm like, I don't even tell people what I do.
Mm.
I don't even like care to just talk about that. I just don't care anymore. I just do it as like, that's my job.
That's what you do.
Yeah. That's
Not
just
who you are, but
yeah,
what you do.
yeah, not
Well,
what I
that-
do at all.
I'll tell you, for
Right.
me, it happened early on in my life as a baseball player. Because once baseball ended, it was like this massive identity shift of like, wow, I've been literally a baseball player for my entire life.
Mm.
The man for
Yeah,
27
you were the
years.
best of the best on every way.
Everywhere I went, I was
Yeah.
the best. And then all of a sudden, you suck. You're released.
Yeah.
You're no good.
Oof.
And usually your conversations before is like, oh, how's baseball going? How's
Yeah.
like-"
Yeah. Everyone asking, oh, yeah, I don't play anymore
yeah,
because I suck.
yeah.
And, it's funny now. Wasn't funny then.
I bet it wasn't.
Yeah. And then, I had to learn like, okay, well, then what am I going to be known for? How am I going to make a mark? It's very much, it was ego driven, very much like your thing 50 years from now. I want to be remembered. And I was like, man, I thought I'd be remembered for being a legend
Yeah.
in baseball. And I'm not.
Not even
Yeah.
a footnote.
Yeah. Freaking nobody even has a clue half
I
the
know.
time now. And, then you do the real estate thing. And so I become known as a real estate guy. And then I'm a social media guy and a guy throwing events. And, you like have to go through this evolution because even like when we stopped doing wealth cons, people are like, why are you guys going to stop? I'm like, well, they don't make money.
Yeah. And they're hard and they're,
They're very
brain
difficult
damaged.
to do. They're
Yeah.
not a good use of time anymore, but they were for a season.
Yeah.
And if I choose to stop doing real estate here in whatever period of time, it's like, why'd you stop? Well, it's real estate's really hard.
Yeah.
This is way easier. This is a way
Yeah.
bigger, like whatever it ends up being. But I don't know. I've just gotten past what anyone thinks. I'm just like, I don't really care.
But most people, they wouldn't even think about getting into something else because they're like, oh, like everyone's
What's everyone gonna think of me if I-
failed,
yeah.
I didn't
Yeah.
do well.
I agree.
I meet a lot of realtors who I talk to who are like, dude, I remember I used to be a realtor and all this stuff. And I'm like, damn, I can't believe you're still a realtor. And like, I know you hate it, but they will not go do anything else. They just don't have the guts to go try something else.
yeah. That's life.
Yeah.
Well, dude, Zoobs, it's always good having you on, man. I like
Appreciate it.
just watching you two, man. Brian, can you say sorry to Zoobs, man?
I respect you a lot, brother.
It's probably the first nice thing you've ever seen.
Oh, no, that's not true, bro. On camera, maybe.
Brian usually tells me, he's like, dude, we need to have Zoobs back on. I was like,
Yeah, I mention you every show, just so you know.
Appreciate it.
He does actually mention you in a lot of shows.
every real esting. I'm like, do you know Michael Zuber?
Just say that to people.
Yeah.
Dude, most of them know me or no?
No.
Nobody.
None of them know you
Clearly
so far.
doing a very good job.
There was a guy. We had a guy who did digital real estate, so he bought websites.
Oh yeah.
But there's nothing to do with real estate. You're like, oh, do you know Michael Zuber? Because you sell websites?
No, because he bought 2 rentals.
Yeah.
He bought 2 sub-2 rentals. He's like, they don't make any money. I was like, bro, do you know Michael Zuber?
Well, I appreciate you thinking of me. Any press is good press.
You're always on his mind.
Yeah, every day.
Every day.
Well, I'll bring you back to the house and the steak.
Yeah, but if people want to like support you, or
Well, how does he buy tickets to that event that Brian's going to get smashed at?
Yeah.
And just
So even better. Hopefully you do come. I know you can come.
he
Saturday.
will come.
I might come. We'll see.
So might come. He will come. We're going to do a live podcast. That's going to be different. Is like last year you were in the fishbowl.
Yeah.
This year we're going to go in a different room. There'll be 21 attendees. So you'll get audio. You won't just be.
Why don't you put me in the main floor and we pick a topic and I just go in?
Just put the man in the
Yeah. I'll come out with my NWO
because I'm not because I don't want to be called a fraud.
Bad music.
He's got Zuber on the back of his face, just like X.
No, it could be like pro-Trump versus, ex-Trump, something like that.
No, I'd love to get you in the podcast. The material's better. So
Yeah.
Flip it up.
There we go. But how do they buy the ticket?
Yeah.
So Eventbrite, the tickets go on sale August 1st, so day after tomorrow.
So there'll be how do I find it? What's the link?
So one rental at a time, it'll be on the website. OneRentalAtAtime.com. It'll be on the main page.
OneRentalAtAtime.com.
But it's not there right now.
It will be August 1st.
That's tomorrow.
August 1st. Okay, got it.
2 days away.
Yeah,
and
by
if
the
you
time we
don't wanna
release
go
it.
up against me, you can put me up against those other girls, Millennial Mike,
You say girls?
You realize you're talking to a SWAT officer,
that's all right.
former
I don't
Marine.
care.
You're calling them girls,
bro.
That's
I'm
very
Puerto Rican,
disrespectful.
bro. I respect him as his career, but the guys that talk crap about me, like, unfortunately, like,
There's
they
got to
call me ugly, they call me bald.
They did call him ugly.
Yeah, and they call me bald.
Now it's got
Well, he calls you bald, so I think that's kind of like.
He's my friend. These people.
So
Anyways,
bald's
it was
not
great
bald?
it was great having you on. That was awesome.
I never called you bald. But no, yeah, one rental. Everything I do is one rental at a time. Thanks.
Wait, are you offended when people call you bald?
No, but I actually.
What if they call you brown?
I would be offended if they ever call me brown.
No, I don't think I would tolerate
Come up there. No, but and if you haven't, you should actually go read his book because I read his book back in the day and it was a good book.
One rental at a time.
One rental at a time.
OneRentalAtAtime.com to get the tickets.
And back to your point,
main
that's it's a bestseller. It's self-published bestseller.
Self-published bestseller. Put them on the map.
Go read it.
Did.
There we go. Guys, we'll see you later. Peace.